Hi guys and welcome to this tax marathon over 2 days. See enter May 26. This is the target for you. This is the target for me. My name is Sourabh Mutha and I'm going to take you over these 2 days of tax journey to get better in your tax paper. I know we're just 1 month away from the exam and lots of thoughts on your mind. But let me assure you, let me tell you, and let me give you that confidence that you have spent so many hours in your respective classes. You have gone back home, you've studied. Of course, there are good days, there are bad days, but you've come so far. And this 1 month is very, very crucial. Of course, you know that. But don't worry, don't target things that are difficult. Target things that you know and keep working on those till you get better at them. And that's what our intention of this tax marathon is going to be. We are going to work on those things that ICI will ask you in the exams and we'll get better at those things. Before we dive in, a couple of things that you should know about this tax marathon. In the tax marathon, of course, concepts we will cover. But concepts, guys, you've already covered. You know what is SOP, you know what is LOP, you know what is ATC. It is time to apply all those sections. So that is what we are going to be doing. Concepts aside, our main focus is on thing that we avoid. And that is one that is writing exam papers or writing exam questions. I've brought out some really good master questions for you guys and we will practice. And I can promise you a lot of what we do in one day and today and tomorrow will also appear in your exam. So that is the whole idea. As and when, if you see any comments, you can let me know. If you have any question and comments, you can put it in and I will reply as and when we go through this series. Perfect. So breaking up the day today and tomorrow. Today, we'll first look at the concepts. Once we are well versed with the concepts, I'll tell you some really important things that you should be careful about for specifically May 26 exams. We'll of course talk about the amendments as well. And once the concept and amendments are over, then guys, we will dive in the world of sums and more sums. Sums that will be asked in the exam will be done today and tomorrow. So that's going to be something that you will get better at. Let's prepare ourselves. So what ideally you should have is open mind, a little bit of tax background, a calculator around you, rough paper around you, the books that you studied from, all that, and everything else you will see on the screen. And everything that you see on the screen is also available on the drive link. If you don't have it, you can access it from this video description. We will add it here. All right, so let's not waste too much time and immediately let's dive into something that you've probably not heard of. First up, in the tax marathon, let's talk about if you are someone who is barely there, that means you paid attention to other subjects and tax is not something that is your strong point, then I'm going to give you some few chapters here. And if you do these chapters, you will definitely cut off at 25-30 marks and the GST marks will help you clear this exam. The first one is rates of tax, the old one and the new one. Make sure you know them. Of course, we'll revise them, but I'm just saying that this is something that will be there in question number 1. There will be the first question will ask you to compute tax and you'll have to know this knowledge. Next, PGBP. If you're a business or a profession, then how do you tackle your tax will be again there. And we'll of course revise the concept and then we'll do a lot of sums as well. Return of income is a very tiny chapter, but at question number 4, it's going to get you 4 marks. So please make sure the chapter is done well. And it's a very predictable chapter. बहुत ही common questions इस chapter में से आते हैं. Next, residential status and scope of income. इसमें you know individual is what is focused on and non-resident, RNOR, etc. is something that you should be well versed with. TDS and TCS, not even advanced tax. Itna, if you do, guys, you are very close because you know there is another TDS and TCS sum in your exam also, and everyone's favorite. And if you've done it from my class, you know the shortcut of blood bank, etc. Set off and carry forward. If you do this, a lot of your marks are secured here itself. Now let's come to the point that no sir, I am strong with all these concepts. Let's go better and bigger. Then comes a chapter called deductions. This will get you some more marks, again question number 1, etc. But this is additional to what we've done already. So these 5-6 chapters plus deductions. Then capital gain. Whenever people think about capital gain, the only thing they think about nowadays is indexation. Yes guys, indexation is out. We'll talk about that. But think about other things, that how you sell an asset, how you buy it, how you sell it, what is the gain you make. We'll talk about that. And IFHP, another not very difficult chapter. This will definitely get you past the 50 marks. How? I'm assuming about 10-15 marks of GST and about 30-35 marks here. And if you want to get an exemption, then guys, this is what it is. You will have to look at the exemption chapter also. You will be well versed with amendments also, salaries also. Of course, not the annoying part, retirement, that never gets asked, so don't worry about it. And clubbing of income, which is another small chapter. These are some chapters that will take you ahead and get you an exemption as well. Some things that you should not forget in exam, guys, carry an extra calculator. I was just speaking to someone here and Ants an observer I've been one as well. I've gone to a couple of centers and people are panicking because last minute something's happened to the calculator. They're not finding one. Or maybe your extra calculator will help someone else in need. So always carry one extra calculator. Always, when you enter the exam hall, take an extra sheet, write rough work on it, and do all your rough work. Every answer you have to structure before you actually put it on the paper. If you put it on the paper without the structure, it will be messed up. Next, always attempt MCQs first. MCQs are like similar to descriptive questions, but you don't need to do working. So basic MCQs questions first. And the last question you will do is question number 1. This is what you will do. These are some tricky concepts per chapter. Once we are done with the concept of the chapter, then we look at the tricky concepts also. And then there are some master questions from different previous years that we will be solving. Guys, the idea is not to make this like another revision video. The idea is to make it like a practice video where we actually practice a lot of sums, and maybe not the ruler, pencil, etc. But we practice a lot of sums and we get a sense of confidence that we know this. All right. So why not start with what I have started here? Rates of tax, the old and the new regime. Let's revise. We'll not spend too much time, but we'll spend some time revising the old and the new regime. So as an individual, which will be in the exam, so I'm not talking about anyone else because in the exam, it's only about individual. There are two aspects. One is the optional tax scheme, which is also called which one? Old regime. And one is the new tax scheme, which they don't call it new. We call it what? Default. Now, sir, what if the examiner, one very common question that I'm asked, what if the examiner does not tell you which scheme is optional or default? Then what will you follow? No, then you will follow default. If they don't tell you which scheme they want to follow, then obviously it is the default tax regime. But the last 4 papers, they've told you to find out the old also and the new also and choose whichever is lower. Because best basically means whichever is lower, whichever tax is lower is what you will solve. That is the first thing. Now, let's go to the old one, and let's see what is there in the old one. In the old one, first you'll get to the total income. And in that total income, if your total income is up to 2.5 lakh rupees, then your tax will be 0. If your total income is more than that, up to 5 lakh rupees, then it is at 5% interest, tax rate, which is 12,500. Keep your calculators ready and keep doing these calculations. Next, if your income is more than 5 lakh up to 10 lakh rupees, on that 5 lakh gap, you will be paying 20%. So by heart, this is 1 lakh. We've done this many times before in our classes as well. And then sky is the limit. Whatever income you make more is at what rate? 30%. So this is the idea and this is the trajectory of old regime. In the old regime, you also have surcharge. The surcharge rates start at 10%, go on to 15, go on to 25, and go on to 37. This everyone knows, but what people don't know is this 25 and 37% surcharge does not apply to 4 incomes. One of them is dividend income. So, sir, what does that mean? If my dividend income is even more than 2 crore, more than 5 crore, I will still pay surcharge of 15% only. And then those long-term capital gains, which is at 12.5%, the short-term capital gain, which is at 20%, on these special rates, you will not apply these higher surcharge rates. It will only be 10 and 15%. We'll do some sums on this, so you'll get an idea, but this is what it is. And everyone's best friend, common man's best friend is HEC, which is always at 4%. This is the old scheme where you get a lot of deductions, lot of benefits, etc. But the tax rates tend to be higher. As compared to that, now let's look at the default tax regime and let's see what is in the default tax regime. Default tax regime is more generous here. There is no age gap here. Of course, if you're a senior citizen, this becomes 2.5 lakh becomes how many lakh? 3 lakh. And if you're a super senior citizen, 3 lakh becomes how many lakh, guys? 5 lakh. If you're sitting in this lecture without revising videos, then it will be very difficult for me to do anything because you will not know even basics. And if you think 8 hours is enough to cover basics and do sums and everything, you're mistaken. So ideally, you should watch probably the revision videos before you actually attend these classes. Next is the default tax regime. Default tax regime says that irrespective of age, up to 4 lakh rupees, we will not tax you. And then the slabs keep increasing by 4 lakhs. So it is 4 to 8, 8 to 12, 12 to 16, anyone? 16 to 20 and 20 to 24 lakh. And if it's more than 24 lakh, then it is 30%. Here, the rates are 0, 5, 10, 15, 20, 25 and 30%. And if I have to give you a shortcut, everything increases by 20,000. So here the first number will be 0. Then it will be 20,000, 40,000, 60,000, 80,000, 1 lakh. And above 1 lakh, whatever you earn will be at the rate of 30%. So just like here we by hearted 0, 12,500 and 1 lakh, you can by heart it here as well. Your good part is surcharge is same, but 37% surcharge does not apply to any incomes. So the rich people would want to be here. And HEC here is 4%. But these rates are great, but they come at a cost. Cost is that a lot of deductions have been taken away. Deductions like minor child 1500 rupees, deduction like additional depreciation, deduction like SOP interest, all of them have been taken away in the default tax regime. In the exam, if they give you one of them, follow it by one. If they don't, solve it by default. And if they ask you both like the last few papers, you have to solve it by both. Now let's see how this is asked in the last few papers. So I'm going to open the ICI material folder. And you check so you know what can be expected in the last few papers. Guys, this is the Jan 26 paper, which has been the last paper before your exam. And in that, what has been asked, you'll see a trend. There is a person called Neeraj. And if you see the last line, compute total income and determine tax liability under both the default tax regime also and the optional tax regime. This is something that we will solve tomorrow in class, the entire sum. So you get an idea of how, and advise Neeraj. Advising nothing. Advise Neeraj to take whichever is cheaper. It's just like you booking on Swiggy and Zomato and choosing whichever is cheaper. So this is one. This is the Jan. If you go just one exam before that also, it is the same. Let's open this paper as well. Neeraj has now become Ram, but the question is still the same. The idea is still the same. You need to compute the total income and tax liability under both the tax regimes, and again suggest the one which is more beneficial. Guys, Ram will also choose the one which is cheaper. The trend does not end here, guys. The trend is here as well. If you see this paper as well. So now there are no points for guessing that even your exam will have something like this only. I'll show you this. This is the one. This is a person called Mrs. AC Bose. And here also, guys, compute total income under default and optional tax regime on the Income Tax Act. So if you can see the last 2-3 attempts and even your attempt will going to be like this. So don't be surprised when you see both the tax regime. How do we solve it is what we are going to be doing. That's the reason I want to meet you today. Not because I want to go through section 10.1, what is agriculture income, all of that you can study from my revision videos. You can revise using those videos. Yes. So today it's all about seeing the pattern and targeting those kind of sums, solving those kind of sums which are expected in the exam. So this is the first one. We did some revision here. A few things I want to add in the new tax regime. Here, there is a rebate up to 12 lakh rupees if you're aware. In the new tax regime, if you earn anywhere up to 12 lakh rupees, there is a rebate. So rebate is up to 12 lakh rupees. But even if you earn a little more, example, if you earn 12 lakh 5,000, 12 lakh 6,000 rupees also, then the extra income and the extra tax you have to calculate. So example, if you earn 12 lakh 6,000, what is the extra income? 6,000. And here the tax is 0. Here you have to calculate the tax. Example, the tax, I'm just saying it's 24,000. Then the extra tax is 24,000. So that 18,000 rupees that you're paying extra will be given a relief and you can calculate your tax accordingly. Guys, all this while we say is different and while we do it is different. So rather we'll do some sums on this very, very soon. We go to the next one. Let's see here. What is the next one, guys? Next one is PGBP. I'll tell you today a secret sauce of getting your PGBP right. Here we go. Forget everything in PGBP, only and only look at the disallowances. If you know the disallowances well, PGBP is something that you can score really well. This is something no one tells you, but I'm telling you today. So let's only go through disallowances, and these disallowances you have to be very careful about. The shortcut is here. Poor politician, cash, UPI. No problem here. We'll revise it together only. If you have any personal expenses, that is not allowed. Very common in the exam. If you're paying someone without TDS, that will be disallowed. And if you're paying to a resident, 30% will be disallowed. If you're paying some relative excessive, that excessive will be disallowed. Political magazine advertisement will be disallowed. Cash more than 35,000 to GTN, 10,000 otherwise will be fully disallowed. Unapproved funds, if you contribute, will be disallowed as a businessman. Provisions and income tax, these will be disallowed. Just make sure you know all of these well because it's very common in the exam. And I'll tell you some things. I'm telling you this, guys, and we can talk about after your exams that these are the things that will be there in your exams. First, as a businessman, you should know how to calculate depreciation. So if it's building, what rate? If it's plant and machinery, if it's intangible assets, and if it's furniture, then it is 10%. You have to know the rates. Plus, there is something called additional depreciation, which is only given to power and manufacturers, and that should be at the rate of 20%, but that is only for things that you find in the factory. Yes. All right. Now, guys, of course, we have handwritten notes, and I believe you've done a handwritten notes revision, guys. And otherwise, this does not work. It's almost like you're running for a marathon and you've never gone to the gym before for months and you've never worked out for months, and suddenly you want to run that marathon. It gets difficult. So please make sure you're learning all these things, but you already know the background well, because all these things I cannot teach you in 8 hours. Yes. Now we move ahead. So depreciation, let's predict PGBP. So in PGBP, one of the things will be disallowances. I'm telling you which are the most common disallowances which you will also find in your PGBP sum. There will be someone who has paid cash which is more than 10,000 or up to 10,000, that we'll have to see. There will be someone who has paid without deducting TDS. There is someone who has paid an advertisement expense in a political magazine. So keep this in mind. Then there is someone who's paying a partnership firm, partner's salary or partner's interest. These are really important. This video will be online also. Later also you can revise it. You can watch it again. Yes, there will be no time to make notes here. Yes. So you can just, because you'll miss out. So keep listening and keep doing. When we do the sums, you do it in fair with me. But here you can keep listening. Otherwise you'll miss the bus. Next, you will have to calculate something called depreciation, which is definitely going to be there. And there is a section called section 43B, whereby the government will give you deductions, but only of those things if it's paid. If you don't pay, then you will not get deduction. The shortcut is merit. If you remember, M for MSME, E for employees payments, R for railways, I for interest, and T for taxes. There are some payments which you will get a deduction only when you pay. All right. Now let's see, whatever I'm telling you is what has actually come in the exams. So let's go through a few papers on PGBP sums, and let's see actually this is what comes in the exam as well. So I'm going to take up a few sums so that you know that this is what is asked, so we can focus on those. Let's take up May 22, a random paper, and let's see here. The first, there is a person called Nisha, and the first thing only they've asked you to calculate depreciation. So something like depreciation is very, very common. Then the second one only is that she has paid some money without deducting TDS. So again, this is very common. I'm doing this because a lot of you guys think that PGBP is unachievable, all this. This is very, very simple. As long as you know what is coming in the exam very often. Next, this is some return money. Again here, the third thing predictable again, 25,000 paid to a creditor in what? Cash. So again, this cash transaction also is very, very common. Then they are paying salary to partners 15%, you know the limit is 12%, and stuff like that is very, very common here. These are the things that you have to keep in mind. We'll take up another paper and see if this is common again. Let's take up November 23. This is Pramod's example, and here also let's check if we are getting similar transactions. Here also, guys, you pay transport charges 30,000 in cash. I'm not saying these are the only ones, but these are the most common ones. Then he has donated something which is personal to National Children's Fund, which you don't get in PGBP. Then this is again very common, that you buy a capital asset like a laptop and you debit it in PGBP. Actually, a laptop should go to the balance sheet and you can only get depreciation. So indirectly, this is a sum even where they're asking you on depreciation. So this is something very common. All right. So be careful with those kind of things for PGBP. I'm going to tell you things which really, really will come in the exam here. The next one is return of income. In return of income, now the most important thing that is expected in your return of income is something called updated return. Let's talk a little about that. Guys, in return of income, you know, as a businessman, as a professional, as a salaried person, at the end of the year, there is a best friend waiting called John. John meets July, October and November. You need to file a return by then. By the time you flip the page, we'll be done with the chapter. Yes, so keep listening. Guys, now is not the time that you'll flip the page, etc. All the time has gone. Now is the time you keep listening. You watch this video maybe again and you revise. Yes. So return of income, you need to know the three things. That is John. That is one thing. Second, you need to know who needs to file the return. So people whose income is more than this exemption limit, people whose current account have more than 1 crore outside India, they have assets, foreign travel, all that you should know. But mainly, guys, what is going to be asked in the exam is how can you update your return, the concept of updated return. So let's go through updated return a little more in detail. First, the section 139.8a is a section for updated return, and the concept, let's go into more detail. This is your assessment year. By the way, your previous year for exam is previous year 25-26, and assessment year is 26-27. After their assessment year ends, the government has given you a window of 4 years. They say in this year 1 year, or this year 2 year, or this year 3 year, or 4 year, that is a period of 48 months they call it. I call it 4 years. You can update your return, but this has a catch. You can update your return only if it is for the benefit of the government. That means your income should increase, or your losses should reduce, or your taxes should increase, as anything that is for your benefit. It's almost like a revaluation. Will you apply for revaluation if you know your marks are going to decrease? No. Same way the government says, listen, I'll accept an update return only if I know it's something in my benefit and you want to do that. Now, in that case, let's say I did not offer 10 lakh to the government. If I offer 10 lakh rupees here additional income, the government will accept my updated return, but they will say, listen, you need to, on that 10 lakh, pay your tax. On that tax, you need to pay interest. And on both these amounts, let's say on this 10 lakh, my tax comes up to 3 lakh, my interest comes up to be 50,000. On this, I need to pay an additional amount. That's called additional tax. Remember these words, additional tax. In the first 1 year, if I file, then I have to pay additional tax. Anyone, any idea of how much percent? 25%. Then this becomes 50, then this becomes 60, and this becomes 70. You should remember the period. You should remember this calculation. And this is not of your income. It's of your tax plus your interest. The exam will have a question on updated return. I'll tell you what they will ask you. That can this person file updated return? Can this period be allowed? There is an excellent question which we've done from ICI material on this. I don't remember the question number, but we can have a look at that for updated return. Also remember, if for a particular year you've updated return, you can't update it again for that same year. So these are some conditions for which you cannot update. And if your assessment, that means the income tax officer has already checked your return, then after that you cannot update your return. So these are some things. Go through updated return in more detail and focus on that more. Yes. We now go to the next one. Guys, don't worry about all this. At the end, we will make a prediction, and we already made one. I'll go through it and you should focus on those chapters. You still have time. Today is the 11th. Even if you spend 2-3 days doing tax, you can cover a lot of tax in 2-3 days. I'll tell you how as well. But right now it's time to learn these things which are going to be in the exam. Next, residential status and scope of income. I'll tell you what comes in the exam. They will either, there are two parts to it. They will either give you a person and they will tell you find out the residential status and scope of income. That means Mr. Sourabh Mutha has traveled abroad, come back to India, traveled again, come back to India. They will make you a puzzle and then they will say find out residential status. For that, you should know the Lakshman Rekhas. If you remember the first Lakshman Rekha, 182 days. The second one is 60 and 365. Those kind of things you should be well aware with if you want to find out residential status. But there's another question they may ask is they will say that Mr. Sourabh Mutha, assume he's a ROR, assume he's a RNOR, assume he's a NR, and these are 7-8 income, which of them will be taxable? So any of these two, but I have a feeling that any one of these two will be there in the exam because usually it is there. Yes, let's go to a couple of papers, recent papers, and see if this is actually the case. Let's go to May 24. Guys, in May 24, let's flip and let's go. Of course, it's never at question number 1, it's generally at question number 2. Here we go. I've just randomly picked up papers, guys. This is not something that I had planned. In May 24, if you see Mr. Tilak, 35 years old, assuming he is what? ROR and only. Yes. So instead of focusing on things that you find difficult, NPS, contribution of master, employer, all that, instead focus on things which are predictable, which will come in the exam, something like this. Yes. All right. So let's focus a little bit on residential status and I'll tell you what needs to be understood well. You should know the two conditions whereby you become a resident or a non-resident. 182 days, 60 days, 365 days. You should know how to calculate the number of days. The day I leave and the day I come back has to be included. Next, if I am, my flashback mode is in India, I'm a resident, I've always been a resident in the last 7 and 10 years, I become a ROR. Excellent. And then sometimes the government tries to make you a non-resident, a resident, and that's called deemed resident, which we in our class have known as AIC 1 and AIC 2. These are some things that you should know. You should also know that as an Indian citizen, the government likes us and they call us EV. If you are leaving India for employment or if you are visiting India, the government doesn't apply the second Lakshman Rekha for us. This is it. Don't go into 6.2, 6.3, 6.4. Of course, 6.2 has recently been asked HUF, but HUF somewhere has base in residential status because 6.1, because even a HUF is a resident, you have to ask the additional conditions to the Karta. I'll show you one of the papers where that question came in. Here we go. And guys, don't look at any other papers. Keep looking at the exam papers because it's a trend. Their paper is going to be something like your paper. Yes. So here we go. Just have a look here at what came for residential status here. Just 1 second. There has been some error in this paper, so the PDF has not been converted well, but we'll still try. Okay, no problem. It's taking some time, but I'll give you a gist of what came in this exam. This exam paper was about a HUF. So section 6.2 is also something that you should probably keep in mind while you're doing this. Now let's go to TDS and TCS, a chapter that bothers so many people, and I can understand. There are so many different sections, and recently for your paper there have been some changes. So I'll tell you the most important ones for TDS and TCS for your exam. There is a section called 194T, T for trust or T for partners trust, where partners are getting salary and remuneration. If you don't know them, watch this video, pause this video here, and then revise 194T. Then there is a section called 194P, P for pension. That is something that you have to keep in mind. Then there are some regular sections when you pay rent, 194I. Then when you pay to a professional, 194J. Now in TDS, no one can predict it because they can put any 3-4 sections and they can make a question out of it. Let's see how typically TDS comes in the exam. Yeah, this is another residential question where they're giving you an individual and they've asked you to find out. This is a second type of question that I was talking about. In TDS, so they've given you 3 cases here. One is you're paying to a director, so that is 194J. One is you're paying for compulsory acquisition, that is 194LA. And one is when you're purchasing in higher quantities, 194Q. So guys, no one should be able to fool you. No one should tell you that these are the important section of TDS, because guys, 194J is the oldest section that came here. Then this 194LA is again a very old section. So it's not that only new things can come, anything but TDS will come. My suggestion is after every chapter, you can do 3-4 TDS sections and you can finish your TDS in that way. We'll be doing a couple of sums and we'll be solving. So at least you know the presentation from 1 and 2 days, today and tomorrow. Next, set off and carry forward of loss. Very undermined chapter, and not people actually skip this chapter. A lot of people don't pay attention to the chapter, but it's very common. You will have a person where they'll give you 4-5 incomes and they'll give you 4-5 losses, and you have to set off those losses, and last you have to tell them if they cannot be set off, where can they be carried forward. Yes, here you have to be careful about 4 losses only. One is if it's a loss from specified business, then it's a unique blood, if you remember. One is a loss from speculative business. One is a long-term capital loss, and one is if you are owning and maintaining horses, that loss is a speculative. That loss is a unique blood. Be careful about these things. Then losses generally can be carried forward for 8 years. Some cases 4. Why am I telling you this? Is because if a loss is coming from last 2, 3, 4 years, count, it should not have expired. Then one more very tricky thing is if a loss is being carried forward, then you cannot take it to other head. Example, if today my house property loss is gone to next year, then it cannot go outside house property head. Also, a major change is happening in the new scheme with respect to set off. I'll tell you the new scheme. Guys, in the new scheme, 2-3 major changes have happened. First, in your house property loss, there can be no SOP loss first, because SOP interest only you cannot minus. So there can be no SOP loss in house property. Second, even if your house property has a loss from LOP, that cannot go outside. It's not a friendly head anymore. It is non-friendly. That's the second change. So if you have a LOP loss, that has to be set off within house property only. And third, you cannot take it to the next year. It is a 1-year game now. So that game gets over. And that's the reason I have a feeling that they will give you a set off sum and they will tell you to do it as per the old one as well as the new one. Yes. So be careful around it. We will of course solve a sum. I'm not going into details of this because if I go into details of this, we'll not be able to solve sums. So we'd rather solve sums and go into very basic overview of these chapters. Next, we come to deductions. Again, guys, deductions, there is a very small secret sauce here of what are the series which are the most important. In deductions, 80D is something that is asked very often. Next is 80E. If you remember, E for education. This is also very common. And 80C, C for contribution, again it is very common. But again, I don't want to fool you. I can't say that these are the only ones because I've seen 80QQB being asked, 80TTA being asked, 80JJA being asked. So there are many sections, but I have taught you. If you are my student and I know this chapter, when you had learned it, you were a boss at it. Yes, so it's only a matter of time that you watch the revision video, you revise it well, and you'll be okay with this as well. Next, capital gain. So this is a chapter that bothers me a lot. Yes, I know. And hence, there is a small pattern I will show you. You follow that pattern. Whenever you spot a capital gain sum, example, you sold gold, shares, etc., just write this down in your book. First, you put your sale consideration. Then you minus the expenses on transfer. Then you put the net sale consideration. Then you minus the cost of acquisition, and then you minus the cost of improvement. And when you minus all these, the final number will either be a long term or short term. Generally, the exams I've seen the trend is generally long term capital gain or long term capital loss. Yes. So let's take a sum and let's see if this is how a capital gain. It's not always the case. Capital gain comes 1 year, doesn't come 1 year. But let's see if this is the case for capital gain. Let's see a paper. This one has so much importance. I'll just show you. This question number 2A is on residential status. This again, second one is also on residential status. So 4 marks plus 3 marks, 7 marks from residential status. For all those people who think that PGBP is the one which dominates, no, there are other chapters also dominate like this. Then there is TDS. Let's see if there's capital gain sum only. Sometimes there is no capital gain sum only. Doesn't look like there is no capital gain sum in this paper. So imagine someone who was studying for the May 23 paper and felt that, oh, there's capital gain, it's going to be so difficult. The capital gain sum did not come. There's no capital gain sum here right in front of me. So it's not always the case, but residential state is always the case. PGBP always the case. Yes. So make sure capital gain is done, but don't get scared. Sometimes it does not come also. Let's see one more. Again here, I'm just showing you. This is also residential state scope of income. How many marks here? 3. How many marks here? 4. So about 7 marks again from residential status. So if they say like this, either you, if they say yes or no without giving reasons, don't write. Otherwise, you always give a brief answer. Yes. And if it's for 3 marks and 6-1, that means really brief, like 1 or 2 lines. Like higher charges paid outside India for the use of machinery situated in India. Yes, taxable because it has been used in India. That's all. All right. Yes, this is the kind of sum that can be expected. It's a 4-mark sum. And here also, it is basically similar only. Sale consideration, let's try and do this in very brief manner. Aryan, a resident individual, sells unlisted shares in a private sector company for 10 lakh rupees. So the sale consideration is how many lakh? 10 lakh. The shares were bought on the 1st of August 2012 for a consideration of 2 lakh. So my cost of acquisition is how many lakh? 2 lakh. Mr. Aryan deposited 5 lakh, that's ahead. He withdraws, that's also ahead. Everything else is okay, perfect. Expense on transfer, brokerage is how much? 2,000. So this is 9,98,000, which we call as net sale consideration. Cost of acquisition is 2 lakh, cost of improvement is 0. Can you tell me what is the long-term capital gain? The long-term capital gain is 7,98,000. If I show you, I'm not done the entire sum, but this is how the trend starts here as well. If I show you here, computation of capital gains here. Okay, they've asked you computation of, okay, I'll tell you what they've done here. Yeah, no, not indexation. This is in which year? 23, 24. Yes, they've taken indexation, but we don't have indexation. We'll talk about this without indexation. Let's go through this sum more in more detail. Let's not leave it halfway. So this is one of the master sums. When we come back to it, we'll discuss it. And then he's invested some money ahead also. You can sell shares and buy a house, and that is a section of exemption called section 54F. All right. I'm putting this 3A as a master sum. We'll solve this sum again. Here it is. Any other sums also, if we feel are important, we'll put them here and we'll try and solve. And once we finish all this discussion that I'm doing right now, after that it's back to back only sums. And guys, trust me on this. You might feel that your knowledge of tax is weak, but the moment you start solving sums, you'll get an idea of how better you are or how good you are, and it keeps improving. Okay, we move ahead now to the next one, which is IFHP. IFHP, I have taught you, and most faculties who taught you, guys, start with house property chapter as the first head of income. In that case, there are 3 deductions. We have a new shortcut there for MSI. One is, if I've given a house on rent, can I minus municipal tax?
Yes.
I can also minus standard deduction. I can also minus interest. So keep that in mind. Then guys, those chapters which we will do last in the stream, of course we'll solve sums on it, but we'll not discuss in too much detail. Exemptions, amendments, of course I'll go through all the amendments with you. I have a sheet of amendments, we'll talk about that in more detail. Salaries is just simple. I'll just tell you here, any amount that your master pays or your employer pays and it comes to you will be taxed. Now whether you call it salary, whether you call it allowances, whether you call it perquisites, they will be taxed. Some of them have a deduction exemption. Example, salaries, you have a standard deduction of 50,000. In the new regime, there's a standard deduction of 75,000. Then if you have some allowances like traveling, whatever you spend, you get an exemption. HRE, you get some exemptions. So that will be here. But this is where you are. Stop there. Don't go into retirement benefits. That's not really often asked. We'll see salary sums also. And you'll know that it's perquisite maximum. They don't even go into retirement benefits. And clubbing of income is very, very, very simple. It's one philosophy only, that if it's your income, pay tax to the government quietly and move ahead to the next year. If you transfer incomes to 4 people specifically, who are those 4 people? If you transfer to your spouse, if you transfer to your son's spouse, if you transfer to your minor child, and if you transfer to your HUF, then in these 4 cases, the income will come back to you. Yes, so that's the, and how it comes back, how you compute it is what we'll do. We've got some really nice sums on clubbing of income, and you will see that your understanding is better when you do these sums on clubbing of income. So this is where we are right now. I feel we should straight away look at the amendments, look at some important things, and straight away start sums. As and when you're doing sums, if there's something I want to explain you, I'll stop there and then I'll continue with those sums there itself. Yes. All right. Just a minute. Wait, recording is not on, streaming is on. फिर अपन YouTube से इसको लेंगे. And इसको water भरना है. All right, so what we'll do is we'll go through amendments and then we'll start doing the sums, but we'll do the sums in a order and in a manner that in these 2 days of marathon class, at least your 30-35 marks are secured. Yes, so let's start, and I'll start with a pain point, and y'all can tell me your pain points. So which is your pain point, like which chapter or which sum is your pain point, if you have to think about it while doing sums. What is the sum that you find difficult? Okay, so what I have known from students, the thing that they find most difficult is the computation of income part, where they have PGBP, they have some capital gain, they have deductions. So those kind of sums are what we will target first, and then we'll keep seeing more and more sums practical. But here are some sums that we will start looking at. So guys, it's now time. We will practice between today and tomorrow 25 sums. 25 sums written, 25 sums nicely done, and the 26th sum you can go and give in the exam and you'll feel confident about it. Yes. So on that note, let's start. I have made a list here and we will follow this list. In fact, we'll start with the last one only and then we will move backwards. So I'll just count the number of sums here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So I had put 20 sums, but now we added one more, so 21 sums. And we'll try and do all of these. These are master sums. That means they make you go through a lot of concepts. Yes. So guys, if you are able, yeah, you can tell me. Capital gains and TDS. Okay, we'll do those also. There are some master sums there also. And if you feel anything else also, we can go through it. But remember guys, TDS, absolutely no one can teach you in 1 hour. You have to by heart the rates, because even if I teach you today and if you don't remember the rates in the exam, you'll not be able to go. So you have to know that there is 194J list professional for which there is 10% TDS. That you have to go through the list. So I'm being very realistic with you here. I don't want to give you any fake promises. So you have to go through the list. How to solve it, how to answer, I will be able to help you. But at least that list, the section, the shortcuts, that has to be done by you before you actually attempt the questions. Yes. All right. Target guys is question and back-to-back question. Let's start with question number 3A, November 23. That is going to be our first question. In absolute fairness, guys, we will also write working notes just like you are doing it in the exam. Yes, let's start. Take a rough paper. No, take a fair paper now. And let's start doing this. In the exam, very neatly, you will write question number 3A. Of course, we will add this here. And people, guys, who are just watching this without solving it, guys, you are inviting trouble for yourself. Of course, you're the best judge. You know what you're doing best. For those who are practicing with me, remember, guys, 20, 25 sums, and you will you will start sensing that you're confident of giving these sums. Someone who just said capital gain, this is a sum on capital gain. All right. Now in the exam, when I start, of course, I will not start directly like this. I'll have a rough work. So I'm going to do the rough work here only. In the exam, you will do this rough work on a different set of paper. Let's start. I'm closing all the unnecessary pages here and just focusing on those ICI papers. This is November 23. We are going to one question which a lot of people might find difficult, but we'll do it really, really well. Let's try. From an exam perspective, this person is Aryan. Of course, indexation, and as and when we come to a concept, we'll talk about indexation. So guys, indexation, let's discuss it very quickly since it's there in the sum as well. Indexation, there is no concept like indexation now. So sir, I've heard that there is indexation on something. I'll tell you how it is. I buy a house for 20 lakh rupees. I'll sell it for 1 crore rupees. What is my gain? 80 lakh. That's my long-term capital gain. So do I index it? Not at all. Even if I sold my house, no. But when you pay your tax, you have two options. One is on this 80 lakh rupees, pay tax at 20% because that's my long-term capital gain rate. Sorry, pay tax at 12.5%. So if you can do the maths, everyone, calculator, 80 lakh into 12.5%, 10 lakh. That 10 lakh is one set of income or tax. And second is, if you want, you can index this cost. So that means I bought the house for 20 lakh rupees, that year's indexation number into today's year's indexation number, and you'll get the new cost. That cost will be higher. And let's say that cost is 70 lakh. I'm selling the house for 1 crore. So what is the gap there? Example 30 lakh, take it on the calculator, into 20% because the shortcut is I-20. That is 6 lakh. Now your two options when you pay tax, either pay 10 lakh or 6 lakh. Obviously you will pay 6 lakh. But if your exam question only tells you compute total income, then you stop at 80 lakh, you don't do this. But if they ask you compute tax, then you will do both of this. This rests the case for indexation. These two options are only available when you're an individual or a HUF. When you're selling any land and building, not residential house, any land and building, and it should have been bought before 2024 and sold after that. We will assume this question to be on the same line. Let's start. You are selling some unlisted shares for 10 lakh rupees. Guys, take your rough work, everyone. And in the exam, you will write this way only, rough work, 10 lakh quickly, but not full numbers. You will just write 10 lakh here. Your expense is 2,000. So this 9,98,000 is your net sale consideration. Rough work, no lines, nothing here. Your cost of acquisition, can I index it now? You all tell me, guys, can I index it? No, because these are what shares? Unlisted. Even if it's a land and building, while calculating, do index. While calculating the tax, you have to index it. So here, what is my purchase price? 2 lakh. So you'll minus 2 lakh, very rough, and you'll get me 7,98,000. This is my long-term capital gain. Where the government says, listen, you know the long-term capital gain rates. If you don't know, I'll tell you guys, it is 12.5%. The government says, I'll tax you at 12.5%. But if you don't want to pay tax, there is an option. You can get an exemption under section 54F. Let's recap 54F. What are you selling? Any family asset. So you can sell shares also like this, and you have to buy a house. So you can take an exemption under section 54F. But for that, you have to make a pinky promise that in the next 2 years, you are going to buy another house. Do you remember this? Yes. Now, only thing is, this is section 54F, where the government says, I don't want your 7,98,000, I want your 9,98,000. If you remember, full amount. So now let's see, out of 9,98,000, how much have you invested ahead? Let's move ahead. Mr. Aryan deposited 5 lakh in the capital gain account on the 15th of June 2023 before filing the return of income. So while the government wanted you to put in 9,98,000, actually how much did you put in this capital gain account? Guys, what is the amount there? 5 lakh. Now wait, before calculating, the shortcut is CIN. What is CIN? You take your capital gain. Can you tell me your capital gain? 7 lakh. Everyone take your capital gain on the calculator. 7 lakh or rough work, 7,98,000. CIN, what is the investment that you are making? 5 lakh into what is the net sale consideration? 9,98,000. I repeat, guys, the shortcut is CIN for this. C is what is your capital gain? Everyone. What is your capital gain? 7,98,000 into what was your investment? 5 lakh, and out of your net sale consideration 9,98,000. So you will do this maths. Everyone do 7,98,000 divided by 9,98,000. into 5 lakh. 3,99,800. The government says, listen, yeah, Sourabh Mutha, whoever this person is Aryan. I wanted to give you an exemption of 7,98,000, but you out of 9,98,000 have only invested 5 lakh. What if had you invested the entire 9,98,000? Then you would get the entire amount. So this is the exemption I'm getting. So everyone, please minus, take your rough work again, guys, get back. 3,99,800 from 7,98,000. And you will get your answer as 3,98,200. This in this year, I will have to pay tax on this long-term capital gain. Let's go to the sum. 8,200. This is my gain. There's some problem with the internet. The connection is successful. Back again. Okay. Hey, okay. Now let's move ahead. You made a pinky promise to the government that government, I'm putting in the capital gain account. How many lakhs did I put? But you still not bought the house. Your promise was to buy the house. So let's say how much have you bought the house for? On 30th April 2024, is it within 2 years? Check. When did you sell the shares? 22. And you bought it in? Is it within 2 years? Yes. He withdraws how many lakh? 4.5. The government is puzzled. They said, listen, you had pinky promise that you will buy a house for at least 5 lakh, but you have only invested 4 lakh. 4 lakh 50,000. So now again we have to do this calculation, guys. Everyone, what is the capital gain? 7,98,000. How much have you finally invested? Guys, divide by 9,98,000. Everyone do the calculation. I'll wait. 7,98,000 divide by 9,98,000 into 4,50,000. 3,59,819. The government says we can only give you this much exemption. But you're laughing at the government because you've already taken 3,98,200. The government says we'll reverse it. So everyone do 3,98,200 minus 3,59,819, and this extra amount that you've taken, 38,381. In the year you bought the house, this will be added back to your income. How could this be avoided? If you had bought the house exactly for 5 lakh only, then there would be no problem. Yes. So let's see the next question. The tax treatment with mention of the relevant assessment year of the unutilized amount. If you don't utilize that 50,000 rupees, this 38,381 will be added back. Guys, this is it. Now, guys, this is not it. We have to present this. And that's where we get the marks. So in absolute fairness, we will present it. I and you will do this together. Let's start again. You will write the heading. Every table should have a heading. Computation of capital gain of Mr. Aryan for PY 22-23, PY 23-24. Very neatly, particulars, amount and amount. Yes, go for it, guys. If you do it today well, guys, in your exam, you'll not have too many surprises, especially with the presentation. All right. What do you start with? Sale consideration. Always, guys, sale consideration. And you can write here shares, unlisted shares. You sold it. If you remember the amount, how much did you sell it for? 10 lakh. Less brokerage, which is 2,000. Therefore, in the exam full form, net sale consideration 9,98,000. Less cost of acquisition. I'm writing it here. You don't have to write this. No indexation. Benefit. You will minus 2 lakh. Therefore, long-term capital gain is 7,90,000. From this, now that I've done in the rough work, I'm very confident that these are some answers that I write. Exemption under section 54F. And you will show the calculation here only. CIN 7,98,000 was my capital gain. My investment amount was 5 lakh in capital gain account. Divide by 9,98,000. That gives me an answer. 3 lakh 3,99,800. So we'll be taxing you on 3,98,200. So this is my taxable long-term capital gain. And just in case you want to know, it is taxed at 12.5%. And this is because you have deposited 5 lakh rupees in the capital gain account. I think that you will get marks for is section 54F. So in the exam, when you write a section, try and put them in a box. And try and put the final number also somewhere underline, etc., so that the examiner's attention is drawn. That is your long-term capital gain is 3,98,200. Nice neat lines here. This is where the table ends. Till now, everything that has been there, we've shown calculation. So this is also the calculation that we've shown. All right. Now, guys, we have to go to the next year. I'm going to a new page. You will continue. This is the second part of the sum. So the first answer you'll have to first write. Everyone, write the first answer. Thus, long-term capital gain in previous year 22-23, assessment year 23-24 will be 3,98,200. Second. Now, why is there a change later on? Because Mr. Aryan did not buy a house worth 5 lakh rupees. So you have to give that background here. You can write Mr. Aryan purchased a house for 4,50,000 within 2 years from the date of transfer. Since it is lower than amount deposited in capital gain account, the exemption under section 54F will be reduced / reversed. Again, guys, same 7,98,000 into 4,50,000 this time, not 5 lakh, divided by 9,98,000 is equal to 3,59,819. Therefore, excess exemption availed 38,000. How much is 38,000? 381 or 831? Can you just check? 381 will be added to income due to such unutilization. And this is the second answer. If I was writing the exam, I would underline this last thing well. And I would underline this so that examiner's attention is drawn to these both numbers, and she will check it or he will check it against the right answers of ICI and then give you the marks accordingly. Suddenly, guys, this paragraph, when you underline, etc., it just gives more element to the answer and it draws person's attention also better. I don't know how much time it's taken, but this ideally is a 4-5 mark question. So you should get in the exam about 10-12 minutes. And I think I'm very confident we've completed that in that much time. So this is how this sum has been solved. This is sum number 1. I'm going to store all the sums here and I'm going to number them to sense that how many sums we can do. This is number 1, tax marathon. And guys, while we're doing some, we're revising concepts. Like in this, we revised 2-3 concepts. One is 54F, the fact that you have to invest the net sale concentration. Second, CIN. What is CIN? You take your capital gain into the investment that you're making divided by the net sale consideration. Then we also saw indexation concept is not applicable. It is only applicable when you calculate the tax. Now just going through the sum, check, have they asked you to calculate the tax? No, only amount of capital gain and the tax treatment. So they've not asked you to calculate tax. So this is the answer and this is where it should be. Don't compare it because this time the provision was slightly different. All right. So this is just one question. We are going to do many questions. Let's try and see the next question. Question number 2B, November 22 paper. And as and when there is something very peculiar that you want me to discuss, let's discuss it. But this is question number 2B. I've taken these master questions. They are very different questions, but they're all really important. All right. This is a question on a very unpredictable different chapter, which is salaries. Yes, try and do it. Let's do it together also. And you will see, you will sense a comfort here also. Let's see what you are required to compute income chargeable under the head salaries, assuming he does not opt for the provision of. And here they've said that if he assumes also 115 BSc. So it's a very good question. Suddenly, because they've asked you for the old regime also and the new regime. Yes, so 8 marks. That means we have comfortable 16 marks. You can take a coffee break, come back and we can do it also. No, I'm just kidding. We'll do it right now. And we'll try and see if we are able to finish it in 15 to 20 minutes should be the ideal time. Yes. All right. Let's start again, guys. After 2-3 sums, if you want a small 5-minute break, we can do that. But right now, we are back again. This is question number 2B. Let's start. Everyone in your neatest writing, question number 2B, November 22, ICI paper. Again, guys, I will always start with rough work. And from the rough work to the final answer, let's complete the journey well. So here we go. Let's start. Guys, this is salary. For salary, first, any amount that is coming from the employer, you have to add it. Mr. B is a sales manager in a company during the year 21-22. Receive the following amounts. What is the basic pay? But only till December. After that, it has become 87. Yes. So everyone do the rough calculation very quickly. 85 till December means into 9 months. How much is that? 7,65,000 plus 87,000 into 3 months. 2,61,000. Total it up, guys. 10,26,000. So you can write 10,26,000. And you can write basic pay here. Very in rough work only basic salary. It's 4:05. Let's see in how much time we can complete this. We have 20 minutes to do this. DNS allowance is 40%. Immediately take that number 10,26,000 into 40%. Yes. So this is DNS allowance. I'm writing DA. 4,10,400. There are two types of DA. We're revising also. One is which forms part of retirement benefits. We call it D. And one is other form of retirement, which we call it OD. We don't know which part of this is. This is forming part of retirement benefits. So we'll write it as D here. Everyone D. This is B. Bonus is 1 month of January pay. January pay is 87,000. Very quickly write bonus here. And 87,000. Next, he contributes 14% of his basic pay and DA towards recognized provident fund. Guys, is it good to save? Yes. So the government has said, listen, if you take some money and you save it, don't worry, it's great. You will get a deduction under ATC. Which deduction? ATC. But in salaries, your employer will also pay. It will come to you, but up to 12% will exempt it, will not tax it. Yes. So first, let's say his employer also contribute the same amount. Let's do the same amount. 14% of what? Basic pay and DA. Do 10,26,000 plus 4,10,400. How much is that? 14,36,400 into 14%. Yes, this is the PF contribution. You will write it here. PF contribution. It is coming from your master, so you will first add it. But then the government says up to 12% we don't want to tax you. So take 12% and exempt it. So again 10,26,000. There is no commission. So 4,10,400 into 12%. 1,72,368. That is exempted from 201,096. So the balance, the government says that we will tax 28,728. So again, guys, we are revising small things. PF you revise. that any PF up to 12% of the contribution will be exempt. For SPF, government companies, full exempt. And if it's an unrecognized provident fund, then God only save you, full thing is taxable. So if this was unrecognized, then how much would be in the outer column? 201096. All right. Perfect. Let's move ahead. Traveling allowance, guys. Good. Thankfully, the employer is giving allowance of how much? 5,000. Now, there are two assumptions. We can assume that this entire amount is spent and they've written duty tours, or we can assume that nothing is spent. So I'm going to assume it is spent because they've said it towards your duty tours, while sometimes I've also solved it the other way around. Yes, so everyone take the maths. 5,000 into 12, how much is that? 60,000. You will just write it TA. Very quickly, TA, traveling allowance. 60K minus 60K, outer column 0. Yes, we move ahead to the next one. Research and training allowance, 3,000 per month. There is nothing spending, so we'll add it. Everyone, research allowance, you will write research allowance. 3,000 into 12, that is 36,000. No exemption because you've not spent it. What if you had spent it? So let's revise that also. As HRA can demotivate, hurt, heartbeat. These are some allowances. HRA allowance, CAN is convenience, daily, helper, uniform, research. All these allowances, either you spend or a fixed amount, you will get an exemption. Next, what is the next one? How much is that? For 3 children. So 600 into 12. Everyone do it. 600 into 12 into 3. So first you will add education allowance. 21,600. But guys, you also get an exemption, which is 100 per month. So up to 2 children, 100 into 12 into 2. So you'll minus 2,400. And I think balance is 18,000. Can you do the math? This is 2,400, sorry. 19,200. 19,200 in the outer column. All right. Next, accommodation owned by PQR is provided to him. Guys, very, very important. If your employer gives you accommodation, again, time to revise. You are staying in a house which your employer has given. So you will basically take your salary. And if it's a very crowded city, 10% of that. If it's a less crowded city, 7.5. And if the least crowded city, then 5%. So 5, 7.5 and 10%. This is in Hyderabad. Hyderabad, you've seen Charminar and all those guys here. So it's very crowded, that area. So it is definitely 10%. So whatever the salary is, we'll take 10% of that. So I'm just writing it here. But we can't because we don't know the salary yet. So write just accommodation. Write 10% of salary. And you keep it blank. So you just put a box here so that we can fill it up later. But this is a perquisite. Yes. And next, guys, furniture is also provided. Again, we'll revise. If your master gives you perquisite, that's a benefit. You take 10% of original cost. So what is the original cost? 2 lakh. 10% of that, 20,000, but it's only provided from October. So October, November, December, Jan, Feb, March. So 6 months. Yes. So do furniture, write furniture here. 2 lakh into 10% into 6 months divided by 12 months. You don't have to show all this in rough work, guys, but I'm showing it because you can get the calculation from here. How much is that? 10,000. Next, reimbursement of medical expenses on a treatment in a private hospital. Let's recap. Guys, is this an allowance or is this a perquisite? This is a perquisite. How do you know the difference? If I give you money and you spend it for a particular purpose, I give it to you, that's a perquisite. But because this is a private hospital, it will be taxed. So then which kind of hospital is okay? GMC hospital. If it's a government hospital, master owned hospital, commission approved hospital, then it will not be taxed. So this one definitely is taxed. Everyone just write medical perquisite. Everyone. Medical perquisite. And because of the private hospital, you will tax 15,000. In all this, I'm just going to highlight the perquisites. Accommodation is a perquisite. This furniture is a perquisite. Medical is a perquisite. Why am I highlighting? Because when you calculate your salary for accommodation, you don't include perquisites. So these are the things that we will not include. Next, a medical allowance is how much? Now, what is allowance? Allowance is money. You can even buy pizza with this money. You can do whatever with this money. No problem. They just give you the allowance. It is taxable. So 1,500 into 12, 18,000. You will write medical allowance this time now. And 18,000 you will add. Sir, what if I had spent this money? Still you will still add it because it's not in that sentence. HRA can demotivate and hurt heartbeat. Only those allowances, there is some exemption. Alright, we move ahead. Premium, the company has taken your health insurance policy. It's okay. Health insurance policy is okay. To give you telephone and Wi-Fi at your home is okay. That will not be added. I'm just revising the concepts through these sums. So you will write here, but you will not leave it, guys. You will write here, right? Health insurance. and you will put a dash. Okay, everyone till here. So the only thing that is left is which accommodation, accommodation. Yes, everything else is done. House is left. Now, guys, for house, I know it is 10% of salary, but what do you mean by salary? Salary is everything, which is SAP. Guys, I'll just revise. In salary chapter, everywhere it is BDC. B for basic, D for dearness, which is retirement, and C for commission, which is a percentage. But only for salaries, they wanted the amount to be bigger. So this one will not only take BDC, we'll take everything. In S, we'll take all the salary amounts. In A, we'll take the taxable allowance. Which allowance? And perquisites will not take. So let's from the start take S. Guys, take it on the calculator and tell me here. Guys, how much is basic salary? 26 on the calculator. A dearness allowance 4,10,000. But you cannot take POW. That means if it's a provident fund contribution or areas or ODs, you don't take that. Yes. Next amount. PF contribution. Bonus. Bonus also you take 87,000. Make it as big as possible because the government wants to make this as big as possible. Next, PF you don't take. So PF I'm not taking. Next, taxable allowance. How much is this traveling allowance? 0. Next one is, yes, so 36,000, whichever is taxable. Next one, and education allowance. How much is taxable? Next, can I take furniture? No, because that's a perquisite. Can I take medical perquisite? No. But can I take medical allowance? Yes. 18,000. You add all these numbers and tell me what is the number that you got. 15,96,600. Guys, in the class, if you have solved this sum, we've taken a different number. Why? Because that time we've assumed this is not spent. So this is higher by 60,000, but doesn't matter. You can take an assumption that traveling allowance is minus because you have spent that money. Now guys, into 10%, everyone, 15,96,000 into 10%. But is the house given from the start of the year? Read guys, when is the house given from? For the whole year, no. House is for the whole year. So all these minute things are important guys. How much is the amount? 1,59,660. Check, this is where it is. Now guys, remember you will always get after this SEP. Guys, can you tell me what is SEP? Standard deduction, entertainment allowance deduction, but this is only for government employees and professional tax. This is not there, this is not there, but will I get 50,000? Yes. As per the old regime, I'll get 50,000. So everyone please add all these numbers. You added anyway still here, add the balance numbers also. 15,96,600 plus 159,660. Yes, provident fund 28,728 plus furniture 10,000 plus medical 15,000. Yes, you are getting 18,09,988. Are we getting the same numbers? Yes. From that you will minus standard deduction of 50,000. And that is 17,59,988. This guys is as per the old regime. Which regime are we in guys? Old regime. All right. But sir, this is new regime also. Yes. You spend 10 minutes. We will discuss the old regime. Now, immediately guys, we'll do the new regime. Everyone make a small box in their rough work only. Everyone, I'll teach you how to make the new regime. You will start with the last number. What is the last number? 17,59,988. Please write that number. And then whatever is a change, we'll keep doing the change. First, how much is the standard deduction here? 50. In the new regime, it is 75. So you need to minus 25 more. So minus 25 more. Next, in the new regime, you get only 5 exemptions. We are revising all that also. Blind can still do tours. Can you repeat? Blind can still do tours. So that means guys, other exemptions you will not get. Only you will get for blind one. Was it there? No, but that if it's there, you will let it be. Conveyance allowance. Have you minus something for conveyance allowance? Have you minus something for standard deduction? This we've already taken. Daily allowance is not there. What is this? Tour and transfer. So guys, out of all the exemptions, the only exemption that is allowed is just 60,000. The other exemption will not be allowed. So let's take it from the top. Any exemption or deduction do you see here? 10,26,000. Any deduction have you taken? No. Any DA? Bonus? Yes. PF. How much deduction have you taken? 12%. You have to add it back guys. 1,72,368 everyone. 1,72,368. Add it back. Whatever exemption you've taken but it's not allowed, you add it back. Next, for traveling, tour and transfer allowance, is it okay? Yes. Research allowance, we have not minus anything. Education allowance, how much have you minus? But that's not allowed, so add it back. Next, anything else have we taken? Accommodation is same, 10%, furniture is the same, medical perquisite is the same, allowance. Nothing is minus, so this is what it is. Now do this maths, guys, everyone. 15, 1759, 988 minus 25,000 plus 172, 368 plus 2,400. That's the next number. 19 lakhs, 9,756. Guys, this is as per the new scheme. This is as per the old scheme. Are we okay with this? Everyone? All right. But we are not stopping here, guys. We have to learn how to present, and that's what we are going to do immediately next. Let's start. Don't overthink this. Let's start. Now, guys, it will go faster because the calculations are all over. Right? Computation of salary of Mr. What is the person's name? Do you remember? Dash for PY dash AY dash. Of course, in the exam, you'll fill it. Particulars. Amount. See the beauty. We don't have to do any more calculation. All the calculations are by hearted. 85,000 into 10 months. 9 months, sorry. Plus 87,000 into 3 months. I remember the amount is 10,26,000. DNS allowance 40% of basic 4,10,400. Bonus for the month of January 87,000. Provident fund contribution 14%. Yes, we can mention it here. Old regime. Or we can't write old, we have to write optional tax regime. Exemption up to 12%. Ideally, guys, see, we have to again calculate, but if in the exam you're rough work on the side, you can just immediately copy. You'll save at least 3-4 minutes because of that. One lakh. Tour and transfer, tour and travel, yes, same. Basically, tour means outstation. Travel is generally local, but if they use the word tour, then that is allowed as a deduction. Travel is also allowed in the new scheme because conveyance. Travel is conveyance. But just since we are talking about it only from home to office and back, that is not allowed. That office to wherever, that exemption you can take. From home to office, you cannot take exemption. Education allowance 600 into 12 months into 3 children. Whatever numbers I know, I'm just writing. We forgot research allowance. Can you confirm the amount of research allowance? And there was medical perquisite, private hospital, 15,000. And there was medical allowance also, 18,000. That's okay. That's not a perquisite only. Exemptions can be removed. जो perquisite है ही नहीं, consider नहीं करे, वो change नहीं हो रहा. Telephone, Wi-Fi, all that is not changed. But those where there was an exemption, like HRA exemption was there. Exemption has been removed. So only accommodation number. Can you tell me the 1 lakh? How much is this? Before the 50,000 salary deduction. 18 lakh. ये रफ वर्क में लिखा है ना सब कुछ अपन ने. 18,09,988. See, rough work का best है. You should keep it on the side and keep copying the numbers so you don't waste time. 18,09,988. 18,09,988. Less standard deduction. How much is that? 50,000. इसका section है 16(1)(a). So good that we are reminding us of the sections also. Therefore, income from salaries is how much finally? 988. This is as per the old issue. Ideally, guys, our time is over right now, 20 minutes. But I think we'll still be better in the exam because we'll get some more time and we don't have to do the reverse calculations again. Yes. But even if you exceed 5 minutes in one sum, it's okay. There'll be some other sum where you'll save it. All right. Then straight away, we will go to the optional tax regime. I'll show you how to present that as well. I'm getting rid of this number. You don't have to calculate the tax. We just have to calculate the income. Again, guys, computation of salaries under 115 BAC. So this is how you will prepare. Everyone be with me and prepare. Yes. Straight away under particulars. Income as above. 17,59,980 less standard deduction 75 minus 50,000 25,000 add exemptions not allowed. First one, education allowance 2,400. PF exemption. Can you just flip the page and tell me PF exemption was how much? 1 lakh. 1,72,360. That's it. These education allowance. Yeah. Research we've not minus anything. Tour and transfer is allowed. Yeah. So what you have to do, ideally go through all the exemptions and deductions, see which is not allowed, and add that back. Therefore, salaries under section 115 BSc. That was 17 lakhs. So this will be higher. How much is this? 9,988. 750. 750. But all of this is great. We have to show working note calculation for accommodation. Accommodation perquisite. %10 of salaries except perquisites and PF. That is 10% of 15 lakh. 15 lakh 96,600. So you take all the salaries except you don't take perquisites and you don't take provident fund. Actually, we don't pick POW. If you remember POW, provident fund you don't take, arrears you don't take, and OD you don't take. Yes, this is a very, very big question. Typically, in this month, you would not want to do this question because it's so big. Who will write it? Who will write under both the regimes? But guys, remember, this is a one-time effort. 20-25 questions. If you do, you will start sensing a confidence. And in the exam, if salary sums come, how can standard deduction not come? How can you not quote section 16(1)(a)? So now that you know, you have to quote it. You will quote it in the exam as well. Yes. Saving this one, this is question number 2. Or this is the second question for our tax marathon. Okay. So this is second question. As the target is to go 20 question, of course, a long target. We'll take a 5-minute break here. We'll come back from the break and we'll continue. I'm keeping the streaming alive. When we come back and we'll continue from here. It's right now 4:30, 4:35. It will be there, but you will not watch it there. So whoever's asking the question, I know what it is. You are thinking I'll do it later, but that later will never come. Your exam is in the next month. So it will be there, but you try and watch it live only. It'll be best. Yes. Otherwise, of course, answering your question, yes, it is there. Yes. All right. Feel कर दिया comment. 5 minutes में continue करते हैं. Okay, so 2 questions down, 18 more questions, or maybe 28 or 30, it doesn't matter, because every question we are learning new concepts. Guys, the traditional way of learning will be very boring in this month. If I go through one chapter, go through all the concepts, you will actually not enjoy it. Instead, let's try and see what is more commonly asked in the exam, like this question number 2A from again November 22 paper. So I'm going to again go to November 22 paper. This is question number 2A. And this is what we are going to discuss. Yes, any comments you can let me know. Okay, perfect. Guys, there's a question called Sarthak. This is very simple. So we'll first discuss it orally only, no rough work required here. And I want you to understand how to present this. This is absolutely important concept. The whole India in reality also, and your tax paper will also deal with this problem of deemed resident. Guys, do you all know what is deemed resident? Yes. Guys, first, a person is happy to be a non-resident, but the government says if you fulfill 3 conditions, which are called AIC1 and AIC2. Guys, let's recap AIC1 and AIC2. AIC1, let's first recap. In AIC1, they say that, listen, you're a non-resident, but are you applicable? Are you an Indian citizen? Applicable to? And if your Indian income is more than 15 lakhs, that means are you rich? Second question. And then third question is that any country is taxing you as a resident? If not, then we are ready to tax you as a deemed resident. This has a section called 6(1)(a), which you will quote in the exam. And this is called deemed resident. Very, very important. This is like the hottest thing right now in residential status chapter. Please make sure you're doing this well. And if not this, then are you an Indian citizen or a PIO? Difference is Indian citizen means your passport is Indian. PIO means someone your mom, dad, or grandfather, grandmother, or nana, nani. Any one of them is from India. Again, Indian income more than 15 lakh. And condition number 2, because you're an Indian citizen or PIO, we do not apply that 60 days, 365 days to you. So now we'll apply that 120 days in this year and 365 days in the last 4 years to you. And if this or this is fulfilled, you will become a deemed resident. That is RNOR. Very important question. And the last 2-3 years, 2-3 attempt papers, I've seen this question a lot. And hence, it's not the concept, it's the presentation which I want to understand. Guys, here, let's do the first one. We'll quickly do it and then we'll present it also. Who is this person? And he's an individual Indian citizen living abroad, Dubai, a tax haven. Tax haven means where they don't pay taxes. We've done this question in class, but it's so important we got to do it again. Determine his residential status. First, guys, everyone, check how many days should we stay? 180 days. Guys, has he come to India ever? No. So is this Lakshman Rekha fulfilled? No. 60 days, 365 days will not apply to him because he's an Indian citizen working abroad coming to India. So guys, he becomes what? NR. But NR we will convert to RNOR, AIC1. Everyone check for AIC1 right now. A, is he an Indian citizen? Yes. Is he taxed abroad? No, it's a tax haven. So only thing is what is, if this is fulfilled, he will become RNOR. Indian income means here plus 1. Guys, 1 minute. What are we trying to make him? RNOR. So we have to take that income. So DR plus 1. So let's say DR plus 1. Income accruing and rising in Dubai, not taxable in Dubai. No. Income accruing and rising in India. By the way, DR plus 1 means DR income, deemed, earned, accruing, received in India. Plus 1 is that income is abroad, but controlled, managed, set up from India. All right. Next, this one is Indian income. The next one also is Indian. And income from Dubai, but profession set up in India. Is this also Indian income? Yes. So add all these 3 numbers very quickly. 20. All right. Now, guys, all these 3 conditions are fulfilled. So what do you become? RNOR. I'm writing here, guys. This is RNOR. And what is your income here? 23 lakhs. Everyone clear? Now, this Sarta I know. Yes, you know it. I know you know it. But how do you present this is what the question. Yes. So let's tell me, guys, how do you present this question in the exam if it comes? No, they are asking you residential status. So first, what do you write is the facts. Can you tell me the facts here? Sarthak, Indian citizen, works in Dubai, tax haven, full stop. In the previous year, 21, 22 has come to India for 0 days. Indian income is as under, and then you will show how many, what is the Indian income? 23 lakh. Facts of the case done and dusted. Now, next sentence. As per section 6(1)(a), first, since he is a Indian citizen, having Indian income more than 15 lakhs and more than, not equal to, more than 15 lakh, and he is not taxed in any country as a resident, he will be considered as a deemed resident. Last line, thus Mr. Sarthak will be considered as a deemed resident, that is a RNOR. And income will be how many lakh? 23 lakh. Now, guys, what if this 10 lakhs becomes 2 lakh? That's the next question. What would be your answer if this 10 lakh becomes 2 lakh, guys? Then 5 plus 2, 7, 7 plus 8, 15. then it's not more than 15 lakh, it's exactly 15 lakh, then what do you become? NR. AIC 1 will not apply. AIC 2 of course does not apply because he does not stay in India for 120 days. So I'm not checking that. So in the second question, what does he become? NR. And again, here also guys, you will just say that since his Indian income is not more than 15 lakhs guys, he will be considered as a non-resident. And as a non-resident, only dear income, not this plus 2, only the first two incomes, 5 plus 8, 13 lakh. And see the last one guys, if Sarthak was born where? So he's not an Indian citizen, but he's a PIO. Parents are born in India. So what does he become? PIO. Now as a PIO, this entire thing does not apply because AIC 1 only applies to Indian citizens. So AIC 2 we have to apply because this applies to PIO, but he's not staying in India. He's staying in India. So again, he will become what? Non-resident, and his income will be how many lakh? 13 lakh. Yes. So how do you present this is what matters. And we have actually done this some, so I'm not going to repeat this, but I'm going to show you how these questions are very common in the exam. And I'm going to give you now next one question for you to solve on your own, and then we will discuss it. Yes. Let's take a latest here. So that paper is not opening well. So in case it doesn't, and let's see in this exam, what was the residential status sum? This is not opening well. So we will go to one paper before that. Let's see in this, what is the residential status sum? Okay. This is the residential status sum. I want you all to do this. Guys, I have shown you Sarthak sum. This sum is similar to Sarthak sum. Yes. And you should be able to get it. Everyone, people who are here also take a picture. People who are online watching this also take a picture of this sum. Take a screenshot, take a picture. I'll zoom in 1 minute. Oh, actually, 1 second. Yes, now take a picture of this sum. I'm going to keep this on the screen. You can refer to that one picture and this one question. Everyone, first, let me guide you. How many marks? About 6 mark question. Everyone, 1 second. Let me guide before you enter. Guys, determine her. Briefly explaining along with the. All right. So same question like Sarthak, residential status, and how many parts? 3 parts. Guys, what I'm trying to tell you, anyone who did Sarthak's question well is doing this question well. And anyone who's doing this question well will also do your exam question well. So there is a trend. Identify it. First, she did not visit India anytime during the year. How many days? 0. Same like Sarthak. Now you will go back and you will do this question. I will give everyone 2 minutes to find out an answer. No problem if you go wrong, but try. Since it's the first question, I'm going to help you. Everyone tell me the first Lakshman Rekha. What is her stay? Here guys, her stay. She did not visit India. What is her stay guys? 0. So is she fulfilling this? No. Always start with this Lakshman Rekha. What is the second Lakshman Rekha? 60 and 365. Is she an Indian citizen? Check, check. Yes. So this will not apply. So then what does she become? NR. NR can be converted to RNOR. Guys, I'm telling you, this is a cousin of Sarthak. This Shweta. Same question, guys. Now tell me AIC1. What is A for? Applicable to Indian citizen. Is she an Indian citizen? Yes. Condition, she should not be taxed in any country as a resident. In country A, she is not subject to. So now only thing you have to find out is Indian income. Let's start. Remuneration from a CA firm in India. Is it Indian income? Yeah. On the calculator, guys, 16 lakh rupees. Income from providing accounting services in country A. Is it Indian income? No. Dividend from country A. No. Income from a business in country A which was set up in country A but controlled from Chennai. So guys, everyone 16 plus 7. 23 lakhs. So guys, I told you she's a cousin of Sarthak. There also same answer we got. So what is the final answer? She's a RNOR. And what is the income guys? 23 lakh. I'm writing it here guys. She's a RNOR and the income is how many lakh? 23 lakh. Now in the second case, she visits India and stays in India for every year since the last 12 years. Now guys, same question, but now she's staying a lot in India. So you will check, everyone, again 2 minutes for y'all, check the Lakshman Rekhas and let's get to our answer. 200 days every year since the last 12 years. No problem. Slowly. In the rough work, either Lakshman Rekha, tick mark. Do all that maths that we've done in class. All right, guys, let's see the second one. In the second one, what is the first Lakshman Rekha? Is he fulfilling the Lakshman Rekha? So automatically they become what? Resident. And guys, if you're spending 200 days every year in India, then is your flashback mode in India, then what do you become, guys? ROR. And as ROR, all income, whether it's 16 lakh, 5 lakh, 8 lakh, 7 lakh. Can you total up all the income? 16 plus 5 plus 8 plus 7. How many lakh, guys? 36. So this is a ROR. Income is how many lakh? 36 lakh. Let's attack the next one also. She did not visit India anytime during the year 24-25. So that means her stay is how many days? Zero. But this 16 lakh, they have changed it, this 16 lakh, and made it 4 lakh. Everyone, now again 2 minutes. Let's try and see. Yes. Sarthak and this sum, if you know, guys, then you are very confident of this concept. Over to you all. Got the answer already? Yes. Now, guys, if 182 days, is it being fulfilled? No. 60 and 365 days? No. So then what does she become? NR can become, but I'm not even checking for AIC2. Why am I not checking? Stays 0 for AIC2. You have to stay for at least 120 days. Yes. All right. Here, is she an Indian citizen? Indian income. Sorry. Not taxed in any country. And Indian income. Now let's check, guys. Here it is. Here it is. 7. 4 plus 7. 11. Is she crossing that? No. So she will become a. And as a NR, only this 4 lakh will be taxed. Why only 4 lakh? Because CMS is not in NR. NR is only taxed on which income? DER income. So DER income is only 4 lakh. If it's DER plus 1, then it must be this. Now the confusing point. Sir, I don't understand this DER plus. I'll tell you. When you're checking AIC1 or AIC2, that I is Indian income. That is DER plus 1. Everyone. AIC1, AIC2, what is it? Indian income. And that Indian income is DER plus 1. That means you need to find out DER plus 1. If it fulfills and you are RNOR, then DER plus 1. But if it doesn't fulfill and you are NR, then only DER income, not that plus 1. So here in our example, 4 lakh plus 7 lakh, we will check. But it is not fulfilled. So you are back to NR, and NR is only taxed on how many lakh here? 4 lakh. So I'm writing the next answer, NR, which is how many lakh, guys? 4 lakh. Yes. All right. Now this has come in the exam and you got to be prepared on writing this. So the first question, you will write all the facts and all, and then you write back-to-back conclusions. Yes. Guys, good, but it's only good till we practice it. So let's practice writing. Have we done this before? This question? You've done it? Okay. So we've done it. Okay, then what we can do is we can try one more question. So in that time, we can try one more question here. Just 1 second. Some problem with my PDF. मतलब ऐप नहीं चलता है तो नया फोन लेता है कि अपडेट करता है आपको? नहीं नहीं, वो सिर्फ ऐप में ही प्रॉब्लम है. Okay, so here is a paper. We'll see what is on residential status here. Okay, here we go. So 1, 2, 3, and yes, 3 items. How many marks? 6 marks. Let's see if you are able to answer. State of the reasons whether income chargeable to tax in India in the hands of the recipient in the following independent situations. Yes. First, you do the first one, second one, third one, and then we'll write. I don't think we've done this in class also, so it'll be something interesting to know. Everyone, here we go. For this, we need to revise the concept. It's a good time to revise another concept called deemed income. Guys, there are some 8 deemed incomes. Let's see if you are able to revise them. Everyone, here we go. The shortcut is ISSDIRF gifts. Now, one by one, we'll revise it. This is how I'm going to take it forward. So whenever we come across a question, we'll revise the concept. If you're a non-resident, and if you own one of these 8 incomes, the government says, listen here, there is some connection with India. You'll have to try and catch the India connection. Guys, this non-resident is earning dividend, but from Indian companies. He's getting salary from the government of India. He's sitting abroad. He's working in Canada. He's working in France for the government of India. He's rendering services in India. Example, he's built the metro train in India. He's getting interest, royalty, or fees for technical services for things which are used in India. Someone took a loan, that loan is used in India. He's getting a gift from India more than 50,000 rupees of property, or he has a business connection in India. Example, he's in China OnePlus and he has an agent in India. Then in all these cases, the government said, listen, Mr. Non-resident, you have an income which has its connection in India and hence it is deemed income. The section is section 9(1). Now with this background, you have to see, only thing is there are some exceptions. This interest, there is an exception. That means if you are a non-resident and this interest is being paid to you by another non-resident, non-resident 1, non-resident 2, then this interest will become taxable only if it's used in India for business and profession, not for income generating activity. Yes. So in the exam, they say business generating or profession, then you'll tax this interest. But if it's income generating activity like buying shares, then this interest will not be taxed. Over to you all. Read it. 2 minutes you'll get for 3 and then we'll discuss. By the way, you will be surprised that this concept is actually a CA final concept. This third point which they've written here is actually out of syllabus. Can you believe that they've given someone something out of syllabus? Now in the paper it's not there, but in the suggested answer they've said that this is out of syllabus. Now imagine you're in the exam hall and you see something like that, you'll be very shocked. First you'll be angry with your faculty, the faculty didn't teach you this. Then you'll wonder what happened. But the best part is, if something out of syllabus and you attempt it, you get your full marks. But guys, even if you want to attempt it, what is Mr. Mahesh earning? And is this dividend connected with India? Assets situated in India. So then he will be taxed, guys. So this is 7 lakh rupees. This will be taxed. Even if you write a wrong answer, you'll get full marks for this one. Read the second one. Who's the non-resident? Shivansh. What is he earning? Interest at 12% from which company? ABC. Is it an Indian company? That means I'm assuming this interest has been used where? In India. So will this be taxable? Yes. Yes. This is very interesting, guys. Please read this. Okay. Now, guys, who's earning it? Ramesh. So let's not focus on Sunil, guys. Let's focus on Ramesh. Ramesh received a royalty of guys, and Ramesh is a non-resident. So now we'll see dear income, guys. Everyone, how much is received in India? Take 8 lakh 25, everyone. 8 lakh 25 into 30%. I know received is 2 lakh 47 500, so that will be tax in India. But guys, is this royalty being used in India? Yes, this royalty has been used for developing a product where in India. So is it used in India? Deemed, how much is that? So which is higher? That will be taxed. Now, if you're wondering, sir, I've never seen this. Of course, you've seen this. We've done it in class. I will show you how we've done it in class, guys. If you go back a few years back and you see a paper here, guys, everyone watch, keep watching. I want to show you something that has happened same way here, guys. The same question has been there before. But just one second, I'll just show you that question so people know that there's a repetition. मेरे हिसाब से तो इतना repetition होता है guys in the papers that if you manage to do the exam questions well, I think you will see a lot of familiarity and you'll clear your exams. I'm not sure about great marks, but at least you'll manage to clear if you do the exam questions well. I'm just showing you the same question has been asked before. Here, guys, can you all read this one? This Mr. Naveen and this one. I'm zooming in. Who's receiving? Naveen. What is he receiving? Royalty. Again, dear income. And how much is received in India? 50%. So 1 lakh 50 is received in India, but has the product been developed in India? Yes. So 3 lakh is in dear D and 1 lakh 50 is in received. So which one will you take? 3 lakh. Yes, guys, anyone who gave the December 21 paper and had written it and solved, in class we solved this. It's there in your handwritten notes as well. If you've not been my student, of course, I'm sure some of the other faculty might have done it because most faculties do previous year's questions. Then this is something that you have to keep in mind that repetition is happening here. Yes, your question. Yes. You're saying it's accruing in India. Why do you say it's accruing in India? Answer is still the same. But why do you see it's accruing in India? In India. But he can argue, see, he's abroad. He can argue that I don't know what's happening in India. I'm to getting my money abroad. So I'll give you a small pro tip. If it's IRF, I for interest, R for royalty, and F for fees for technical services, then by default you have to check usage in India. Don't check any other things. Check for deemed and check for usage. Yes. All right. Perfect. Guys, this is for how many marks? Can you just check? Yeah, 6 marks. But I think we should not leave the hang of not presenting it. Let's present it. Mrs. May 25. Let's present. This is the third question we are presenting. Everyone, let's start writing. I want all of you all also to write here. Everyone, question number 2. Okay. Now, guys, I remember the last sum, we took 5 minutes extra. Let's see if here we can compensate with 5 minutes less. So this is a 6-mark question. Let's see if we write it in 12 minutes or we write it lesser. Guys, what is he earning? Dividend. Yes, please write. Is he a non-resident? Have they given? He's a RNOR. Facts of the case, please write, Mr. Mahesh. He's a RNOR. In the example form. See the beauty, guys. Section is 914. How you remember? ISSD. D is 914. If you write a section, put it in a box. The final word deemed and taxed in India. Something like dividend can be put in a box. Decorate it, guys. Just decorate your thing. Underline the main things. That it's a foreign company having substantial assets in India. But of course, in decoration, don't underline the entire thing. Then it'll lose essence. Yes. Okay. Next person. This guy is a non-resident. RNOR and NR. Both. Wherever the D part, see what is 9-1 is the deemed income. So wherever DEAR and DEAR plus 1, it will be applicable to both. So you all will tell me, guys, for interest, what is the section then in deemed income? ISSDI 915. Every section as per Income Tax Act 1961. And that you can make a short form. You can define it once and then in that some use Income Tax Act 90, IT Act, right? This is royalty received in India is 30%, but developed in India. So whichever is higher, does was that substantial assets in India? वो वाला है safe value. दिखा दो. Guys, whether you realize it or not, there are only two things which we lack. One is practice, writing practice. 1-2 sums don't cut it. You have to do in double digit numbers practice. Only then it works. And second is basically knowing which are the important chapters. If you know this, then you'll save a lot of time in revising also, and you'll focus on writing also a little bit better. and both of which I'm trying to do in today and tomorrow's session. This is which question number? Done, guys? Are we okay? Okay. I think this is the third question we've written. Can you just check? Yes, third. All right. On that note, guys, we look at another one. And every time we're doing like this sum, we'll revise deemed income. So every time we're doing something, we're revising a concept. So that's also a nice thing that we have moved ahead with. This is the first, second, third. This is now hopefully, guys, we will move to different chapters. But now from this, I know residential status is there in your exam. So let's try and secure marks. 4, 5, 6 marks from residential status, scope of income. Everyone, I hope you're confident that you will get those marks. Now we are going to question number 1 of November 22. Question number 1 is that big question for 15 marks. We'll try and see if we can do others before we can do that question. But that also something that we have to do. We cannot avoid it. Let's do question number 3B, May 22 paper. May 22. MCQ, we can make an MCQ or we can take some MCQs also. Question number 3B. We've discussed this question. Yeah. Can you quickly have a look at this question? Again, residential status, scope of income, no problem. We'll continue, but we'll not write this one. We'll just quickly discuss it. Read it. Tell me a residential status. They don't even ask for the income. They only ask for residential status for 4 marks. Over to you all. So we went from Sarthak to Shweta, now to Shruti. All are similar questions. All are based on deemed resident. Concept is important. First cousins. See the R and O. Let's check. First question, first step, section 6.1, 182 days. Is she meeting 182 days? She's here in India for how many days? So she's not meeting this one. Which is the next one? This does not apply to her because she's a Indian citizen. Remember EV. So then she becomes a NR. NR will be converted to R and OR. We can check for AIC 1 or AIC 2. But AIC 1 will not apply because they've not given that she's not taxed in any country as a resident. That is not there only. Let's check. Bikana, that's a big assumption. So AIC 1 will not apply, but don't worry, there is AIC 2. Let's check for AIC 2. Is she an Indian citizen or PIO? This year, has she been there for 120 days? Yes, and the last 4 years, how many days? 365. Total it up, 200 plus 100 plus 76 plus 45. 420. So she's meeting this, and Indian income should be more than. So if you check the Indian income, salary in UAE, no. House property in UAE, no. This India, this 10 lakh, and this 3 lakh. How much is that? 18 lakh. So is it more than 15 lakh? Yes. So she becomes what, guys? R and O. That's it. And now tell me, if they ask you the second part as an R and O, what is her income? Then it will be the same answer. Only if they don't become R and O, they become NR, then the answer will change. Yes. All right. Perfect. Okay. So this is. This one was which question, if you remember? This was question number 3B, May 22. 3C also, there is a question 3C, May 22. Clubbing, this is, just wanted to remind you, this is a different question. Since we're talking about clubbing, let's talk about this concept. Can I transfer my assets to my HUF? Yes. The income will come back to me. What if the HUF gets partitioned? Then only if the asset goes to my spouse, only then clubbing will apply. Yes, yeah. So I transfer it to HUF, income will come back to me. HUF gets partitioned, assets goes to my brother, it will not come. Sister, no, only if it goes to spouse. Of course, minor child, anyways, it will come back to me. All right, so that is something else. I'm just highlighting these kind of questions that we are done. We don't have to write them. Question number 4A, again of this only. What are you saying? Sorry. Yeah, we'll do it. But we'll do it in stages. Okay. Yes. A different sum. We've not done this. I know for sure we've not done this in class as well. It's a 6-mark question. And it'll be good to do this question. If there are some new concepts, we'll also discuss it. Yes. So over to us, guys. 12 minutes is what I'm expecting. Let's start. From the following particulars furnished by Mr. Suresh, how many years old? 53, a resident Indian for the previous year, 31st March 2022. Guys, take a rough work. Everyone, let's start. Question number 4A. This is May 22. ICI paper. I'm writing rough work here. Of course, in the exam, we'll have a separate sheet. Guys, what is his age? 53. The year is 21-22. You can write here quickly. Previous year, 21-22. You're required to compute his total income and tax payable for the year. Okay, you have to compute the tax also. Yes, so it's a good question. And they've not said anything. Which scheme is he under? Assuming he does not opt for which scheme. So then which scheme is he under? Old. You can just write here old. And he's 53 years. So I'll tell you what all the questions are there. First, this one is on capital gain. He owns an industrial undertaking, special economic zone. If you remember 10AA, if you don't remember, we'll recap it. Crossword puzzles and interest. This is IFOS. And tuition fees of 3 children. This is deduction. So it's a very, very good question for 6 marks. Let's see if you're able to answer it. Yes, one by one. Guys, we'll first do the capital gain thing. We've just discussed capital gain. Yes, so let's write for capital gain. What will you start with? Sale consideration. Make a small capital gain column here. Sale consideration. He sold his vacant land on the 9th of December 2021 for how many lakhs? 15. But guys, in case of buds, whenever you're selling any land and building or unlisted shares, etc., the government doesn't believe you. They take whichever is higher. Guys, how much do you sell the land for? But what is the stamp duty value? 19. You get a margin of 10%. Everyone take your calculators. 15 lakh plus 10%. 16 lakh 50. But is the stamp duty value higher? So we'll have to take that one. Everyone take 19 lakhs very quickly. Rough work, so only 19. Next, the fair market value of the land was on 1/4 April is 6 lakh. Stamp duty value is 5 lakh. The land was acquired in 1996. Another concept. Guys, if it's old fashioned, any asset bought before 1/4/2001 is old fashioned. That means you have to take the original cost or fair market value, whichever is higher. Please tell me what is the original cost. Guys, the land was acquired for how many lakh? That's the original cost. What is the fair market value? 6 lakh, which is higher. But only for land and building, there is a ceiling. Guys, ceiling is the stamp duty value, which is alright. So guys, this becomes my cost. Everyone, just write all the numbers first. Expense, then net sale consideration, COA, COI, long-term capital gain. Write all this and then we'll fill in the blanks. What does this cost, guys? Everyone, 3.4 or 6? 6, but we'll have to limit it to 5. Can I index it? Excellent, guys. No indexation. Only when you calculate the tax, this time we'll do the indexation part also. Alright. This is how we apply the concept, guys. This concept we'll apply. Alright. Next, the land was acquired. Here incurred registration expense of 15. That is, that time 3.4 plus 15 was 3.55. I'm not getting the answers, not even getting convinced by the answers. Guys, please tell me what is the original cost. No, it's 3,55,000. How? Guys, you paid 3,40,000 plus you paid. So this is 3 lakh. This is not today's expense. This is that time's expense. The cost inflation index doesn't matter. Guys, calculate, finish the calculation. This is 0. This is 19 lakh. This is 0. This is 14. Don't do anything in fair. This is it. No indexation when you calculate the income. Only when you calculate the tax, we'll do the indexation amount. First number, what? Second one. Guys, when you go to SEZ, the section is 10AA. The government says, thank you so much for coming to an SEZ. We'd like to give you a deduction under section 10AA. Awesome area. The deduction is for how many years? 15 years. For the first 5 years, you calculate a number called SEZP from the SEZ, whatever is the profit into the export turnover. I am very annoyed that I have to reply to all this and still I'm not getting the response because this is so basic. For the first 5 years, you get 100%. For the next 5 years, you get 50%. And the next 5 years, you get 50% subject to a condition. Let's see. He owns an industrial undertaking established in a SEZ and which has commenced operation during the financial year 1920. The total turnover of the undertaking is, which includes 120 lakhs from export. The industrial undertaking fulfills all the condition of 10A. The profit is 30 lakh. Everyone go here and put PGBP. Write PGBP and write SEZ PGBP 30 lakh. When you add all of that, you will get a 10A deduction. So write the 10A deduction here only, guys. Everyone write GTI. Under that 10A. I'll wait. You don't get the 10A deduction here. You get it after GTI. So tell me 10A deduction, guys. Are we in the first 5 years or not? Let's check. Guys, this exam question is in which year? 22-23 assessment year. That is previous year. 21-22. If you didn't want it, you have written it here also. That's why we write it in the rough work only. And when is this of business setup? So 1920, 2021, 21-22. Are we in the first 5 years? Let's do the maths, everyone. What is the profit number? 30 lakhs. SEZ PE, profit into export. What is the export number? 120 and total turnover is 300. For those who don't remember this, in class you had shouted SEZ PE, SEZ PE. This is that SEZ PE. So SEZ PE for profit, export is 120 divided by 300. Do this maths, everyone. I'll wait. 120 divided by 300 into 30 lakhs. 12 lakh. Guys, will I get the full deduction? Yes. So you can write 12 lakh here and you can put it in a bracket. What if this was next 5 years? Half. And the next 5 years subject to a condition again 50%. So this is also done. Next. He has income from crossword puzzle. What kind of income is this? Yes, casual income. So you will make one more column here, IFOS. And write casual income. How much is the casual income? 10,000. And now let's revise casual income also, guys. The government has a policy that if you get lucky, the government also wants to get you lucky on the full amount. So on this 10,000, guys, the government will straight want 30%, no deductions, nothing else. All right. Which is the next income? FD. How much? 15,000. You can write here FD interest. 50. Now guys, he's 53 years old. I keep reminding myself of a deduction, 80 TTA, 10,000 annually. If you are below 60 years and if you have savings account interest, then you get deduction up to 10,000. And the same for Buddha people or older people, 80 TTB, that is 50,000. So what is his age? Will he get TTB? No. And TTA he can't take because this is FD interest. TTA is only for savings interest. We are revising deductions also indirectly. What is the next last one? How much is the tuition fees? 36,000 for how many children? 3. Guys, remember deduction called 80C. Girls' life now needs 5 senior assets. One of them is Indian education. If you pay for your children's education fees, not donation, not private coaching, then you'll get a deduction, but up to how many children? 2 children. So 12,000 into 2. 24. Everyone go here, write 80C. And 24,000. Yes, so this is where we are. Now, I think everything is okay. We can add all these numbers. Please add all these numbers. First 14 lakh plus 30 lakh plus 10,000 plus 15,000. Total number. All right. So please write GTI 44 lakh 25,000. From that, you will minus 12 lakh. And you will minus 24,000. So total is how much, guys? 32 lakh 1,000. Now comes a tax liability perspective. So guys, is there any CC income in this? So what do you mean by CC income? If there is no CC income, life is good, guys. How much? What is the age? 53. Up to 2.5 lakh, 0. 2.5 to 5, 5%. 5 lakh to 10 lakh, 20%, and more than 10 lakh, 30. This was if life was no CC. But there is CC income. C means capital gain and C means casual income. So we have to separate all of them in different heads. Yes, everyone, no problem. We'll do it. First, guys, make a column like this. Everyone in your rough work. Make 3-4 arrows like this. Right? Normal rate. This is long-term capital gain, 12.5%. Short-term capital gain, 20%. Again, listed shares, long-term capital gain, 12.5%. Yes, subject to 1,25,000, good. And casual income is 30%. Now, what you have to do is this in the exam also you have to do if there is a segregation of CC income. First, fill in the blanks. What is the casual income? 10,000. So go to casual income and write 10,000 here. There is no listed share. Put a cross here. Put a cross here. But is there long-term capital gain? Yes. What is the long-term capital gain? 14 lakhs. But there is another option. So you have to write or here and we will have one more calculation here. And everyone do 32 lakh, 1,000 minus 14 lakh minus 10,000. 17 on like 91,000. Difficult sum, guys. Good that we are attempting this sum. Now, what we need to do is tell me is basic exemption limit. 2,50,000. So here only it will get adjusted. Otherwise, it could have gone ahead, but here only it will get adjusted. So let's do it with me, everyone. 2.5 lakh, write 0. I'll wait. Then up to 5 lakh, you know already, guys, 12,500. Up to 10 lakh, that's a by heart, good way of by hearting it, 1 lakh. And from 10 lakh to 17 lakh 91 is how much? 7 lakh 91 into 30%. Add both all these numbers. 3,49,800. Guys, this is what it is. This is also fixed, guys. 30% of 10,000. How much is this? 3,000. Write it here. Everyone, I'll teach you how to do this. One sum you do this, and in the exam it will be helpful. Now, long-term capital gain, everyone take 14 lakh on the calculator into 12.5%. How much is that? 1 lakh. But there are two options. First, I'm putting this in a circle. Whichever is the lower one we'll take, guys. One is 12.5. Next, Hyundai car is I-20. Now for that, we'll have to do a regular calculation again for I-20. 1 minute, everyone. Guys, go back to your capital gain. And same way, we'll do the indexation concept here. Guys, what is the sale consideration? 19. Do 19 again. 0 again. Net sale consideration 19 again. Only thing, cost will change. What was the original cost? 5 lakh. Index it, guys. Everyone, 5 lakh. I'm just removing this indexation number. Take your calculators, guys. 5 lakh. Divide by 100 into 317. 15 lakh 85,000. Please minus that 15 lakh 85. So all I've done is change the cost. Minus 19 lakh is 3 lakh 15,000. Now this is the index cost. Take it here, guys. 3 lakh 15 when you're paying your tax. Take 3 lakh 15 into 20%. Now tell me, guys, which is the one you want to pay? So your gain is still, guys, a 14 lakh, but when you have to pay your tax, you'll pay how much? 63. So everyone cancel this 1 lakh 75 and you'll only pay 63,000. Add up all these numbers now fresh. 3 lakh 49,800 plus 63,000 plus 3,000. Yes, write basic tax. I'll wait, everyone. Write basic tax. 4 lakh 15,800. No surcharge because it's not more than 50 lakh. And HEC of 4%. 4 lakh 32,432, which is rounded off to 430. We do the round off concept. If the last number is below 5, you take it the earlier. If it's 5 or above, you take it to the next 0. Yes. So this is it. Now, guys, this is a very difficult question. But if we do one of this, then the next one trend will become easier. When will we do this arrow? Then when you see CC income, CC means capital gain and casual income. Casual income always at 30. First do that. And capital gain, can you adjust the basic exemption limit? Yes, you can if there is limit. Like here, if it was not 17 lakh 91, if it was only 91, then basic exemption limit is left because your basic exemption limit is 2,50,000. So the balance you can adjust. Except for listed share also you can adjust. Above 1,25,000. Everywhere you can adjust it. Repeat, you cannot take on listed share. Yes, all right. See, it's like this. The government gives you some amount that they don't want to tax you. That's called basic exemption. Now that is 2,50,000. How much is that? Now from a normal rate, if I remove 50, that's still 2 lakh is left, right? So I can adjust it against other incomes. The government's intention is except casual income, except you can adjust it against all other. But if you're a non-resident, then only against normal rate, not others. All right. So these are some complicated things. Let's try and see if we can present it. And then again, we'll take maybe a small break or a small detour or a smaller. Yes. Can we? All right. Keep those numbers handy. Keep that rough paper handy, guys. Let's start presenting it well. Okay. Question number is? Question number 4A. Okay. Question number 4A. Everyone, let's start. Computation. Total income and tax liability. Who is this person? Have you named this person? Okay, no problem. Of Mr. Dash. Yeah, 53 years old. Yeah, that I remember. 21, 22. Right, 22, 23. एज लिखना जरूरी नहीं, बट कैलकुलेशन एज देते ना तो समझ जाने का कि टैक्स करना पड़ेगा कैलकुलेट. जनरली व्हेनेवर दे गिव एज दे आस्क फॉर टैक्स. So there was PGBP. First we'll write PGBP. Capital gain, sale of land. You can put this in the outer column. Tax. Then we'll give two options. I'll show you how to do it here. क्या करना है? कल भी इधर ही करना है? कैसे करना है? Where do you all stay? You all are okay to come here? Yeah, you're okay? What? Okay, okay. So if you're coming, then we'll do it here. No problem. It's Sunday, there's no traffic also for me to be here. It's okay. So 10A deduction, guys, if you remember, the profit was 30 lakh into 120 lakh divided by 300 lakh. And this is in the first 5 years, so into 100%. नहीं कल क्लास नहीं. हाँ, बट वो एडजस्ट किया आगे. तेरे को इतना कैसे मालूम दूसरे का टाइम टेबल अच्छा नहीं चलेगा? मेरा स्केड्यूल तुझे ज़्यादा अच्छा है, बता. I like it though. And this is ATC deduction. Okay. Interesting. ATC deduction, school fees for 2 children. How much is it if you minus 30, 44, 25 minus 12 minus 24? Don't minus it now. Just check the number from behind. Now, guys, this is the essence. We are calculating tax liability. Whatever you did in the rough work, it's important to show how present it. Okay. So tax liability, which is the most sure tax liability? Casual income. So write that first. So tax liability first. Casual income. 10,000 into 30%. 3,000. Second. Long-term capital gain. A 14 lakh into 12.5%. Or B indexed long-term capital gain, working note 1 into 20%, 63,000. This you can put in working note, how you got that indexed long-term capital. And third, tax on balance, 17,91,000 on slab rate. 0, 12,500, 1 lakh. Total 432 here it is. Okay. 415,800. No, I'm getting 415,800. Add HEC. In the exam, you can show twice also. You can show the original number and then round it off. If you don't have time, straight round it off and write round it off. If you in the rough work also you have the right answer, but you don't have the time, just make some presentation and make sure that the right answer is reflecting. So just add all those numbers. Like here, if I didn't have so much time, I would just write tax liability, put the tax amount, put the number, and just move ahead. Yes. So the final number, if it reflects, it's a good win. Yes, that working note has to be there. So I'm just writing that working note. If the offline, there's no offline session, I just have 1-2 students who moved here, who come here. In case there's someone else who also wants to come, you can welcome. But I was treating this more like an online thing, but doesn't matter. Tomorrow also we are coming here at 9 o'clock. In case you want to come in, you can come in. All right, perfect. Guys, here we go. Just write this working note, please. Very important. Indexation option. Because we are selling land. Sale consideration, same 19 lakh. Less index cost. $5 lakh divided by 100 into 317. 15,85,000. Just 3,15,000. Long-term capital gain. Taxable at the rate of 20%. The shortcut is I-20 is equal to 63,000. I-20 is only for Yes, that's it, guys. These are the kind of questions that really make a difference. I'm telling you, when you see something like that in the exam, and if you've done this before, you revise it, I think it should make a good difference or give you that confidence to write this in the exam as well. Yes. कुछ भी आ रहा होगा तो मेरे को बता देना, और कुछ important है तो. Okay. All okay. Okay, so this is the fourth question. I don't know how much time has been in the last break. I think 1 hour, 1 hour, 10 minutes. Can we do one more? Yes. Which is this question we are done? Question number 4, 4A. Okay. Okay. Now, since we are asking about MCQs, this is an MCQ where, based on the above information, choose which value first. NAV. So for house property, you have to choose NAV. Deduction in respect of interest on loan, you have to check the deduction, how much interest you'll get. Compute her total income. Yes. So 2 marks, 2 marks, 2 marks, 6 marks. That is how much time will we have, something like this, guys. 6 marks into 2 minutes, 12 minutes. So let's see if we are able to solve this. The best part about MCQs, guys, now after doing so much, the trend is the same, the concept is the same, but you don't have to present. Yes. Try and do this. And before we do this, let's keep revising. IFHP. In IFHP, the government has a philosophy that, listen, yeah, congratulations, you have a house, giving it on rent. You take the actual rent. Which rent? Compare the expected rent and take whichever is higher. We'll give you deductions for unrealized rent. Take it if someone is not paying you. If there is a vacancy loss, take it. But for vacancy loss, AR should be more than your ER. And then after that, you don't look at ER. And then once you get to a number called GAV, gross annual value, the government is smiling because they get some income. So they give you 3 deductions. MSI. First, municipal tax, but only if it's paid by the owner. Next, S is standard deduction. Everyone gets 30% of NAV. And our last is interest. Let's come to interest. Interest generally is whatever I'm paying to the bank that year, or paid or payable, but not interest on interest. Fresh loan also it can be, multiple loan also it can be, but house. But if I have PCP interest, that means I have a construction phase. I bought the house, I constructed it, and that PCP interest I have to take, total it up and divide it by 5. And that plus my interest of the current year will be my total interest. But if this house is suddenly an SOP where I'm saying it myself, the government says I can't give you unlimited interest reduction. These two numbers, when you add, I'll put a capping of 2 lakh. And for some cases, if you see the word repair, etc., then 30,000. Guys, one only simple pro tip I'm giving you in the exam: don't limit interest unless you see the word SOP. Only pure SOP. House can be LOP also plus SOP also, same as LOP. If you have more than 2 SOPs, it will be called DLOP. And if you're a builder, then please sell your houses within 2 years. Otherwise, it will be DLOP. That unrealized rent, when you get it back, it's arrears of rent. It will be taxable. If you are co-owned a property, then split it between the 2 co-owners. If it's self-occupied, both will get 2 lakh or 30,000. And yes, if you have divided the house, example, ground floor I'm staying, first floor emptied out, then the calculation also has to be divided. This is one such case where the house has been divided. I'm giving everyone 2 minutes. Read the question, get familiar, do your rough notes, etc. We have 12 good minutes to do this. Let's see how much time it takes. Over to you all. The more you write in the rough work, the better it will get. Like whatever information I'm getting, 1/3 is SOP, So I'll write 1/3. 2/3 is LOP, so I'll write 2/3. More you write SOP, the number is 0, 0, 0. You will only minus interest. LOP, you compare AR with your ER. Yeah, one sec. Yes. Okay, so now that you spend some time doing this sum, let's try and see where we are on the sum. Guys, Prerna has a residential house property where SOP is how much percent? 1/3. And LOP is how much percent? 2/3. Don't focus on the interest part first. Do the other parts and then we'll go to the interest part. Here it is 0, 0, 0, and the only deduction we get in SOP is what? Interest. She wishes to opt for the default tax regime. Outside the default tax regime, in the old regime, you can get interest for SOP also deduction. Let's go here, guys. What has she rented out for? Monthly rent is 12,000. So 12,000 into 12, your actual rent is 1,44,000. There is no unrealized rent. There is no vacancy loss. That's a good thing. Next, expected rent. That's confusing. First, you need the fair rent. Fair rent only for the let out portion is how many thousand? 30,000 into 12 is 3,60,000. That's the fair rent. Standard rent, sorry, municipal value for the whole house is 2,40,000. So divide by 3 into 2, that is 1,60,000, which is higher. But you can't take 3,60,000 because the standard rent is only 2 lakh. Actually, standard rent is 3 lakh. But for all that, you have to divide it. So you have to basically take expected rent is 2 lakh. So we'll take 2 lakh or 1,44,000. 2 lakh. So my GAV is 2 lakh. Step by step, guys, you have to do. From GAV, can I minus municipal tax? Yes. Let's minus municipal tax. The municipal tax are 10% of the municipal value. What is the municipal value? 2,40,000 into 10% is 24,000. Divide by 3 into 2. Only 2/3. So that is 16,000. So 2 lakh minus 16,000. 1,84,000. Here is my option, guys. Option answer is C. 1,84,000. Yes. Alright. Guys, this is an exam question. For all of you all, I know MCQs worry you, but that's because probably you've not seen them. So you try and see them, try and solve them, get your answers. If it's very difficult MCQ, let it go. Try and do the other ones, keep that pending, and then after you finish, otherwise it will spoil your paper. Next, deduction in respect of what? Interest. Now comes the interest part. I'm going to delete all of this. I'm going to make some space. Interest is not difficult, guys, if you break it up. Yes, everyone. Please tell me, did you take a loan? What is the loan of? 45 lakh. And it is taken on the 1st of April 2021 for construction. So I know there are two parts to interest. One of them is PCP and one of them is current year interest. Now I have to do both. The first is current year. Which year is the question of? Question is of 23-24. So this is 23-24. When was the house completed? 30th June 2022. So this is 22-23. Before that period is PCP. Guys, this has to be understood really well. So 22-23 was last year. This is this year. Before that is PCP. Now PCP has to be focused on last. First current year interest. So that means this year interest. When did you repay the loan? She repaid the entire loan on 30th June. Is it this year only? Yes. That means in this year, there is no full year interest. There is only April, May, June. So take your calculators, 45 lakh. Into what is the rate of interest? 10%, that is 4.5 lakh. Divide by 12 into 3. 1,12,500 is my current year interest. I'm writing it here. That is done. Guys, people always find out the current year interest first. Now PCP. PCP is not this year, by the way. PCP is before that. Before that is which year? In this year, pre-construction period interest was how much? 4,50,000, 45 lakh into 10%. But I'll get it not as a cake, but as a pastry. In how many parts? 5. So 4,50,000 divided by 5. How much is that? 90,000. So this is 90,000. And this is also done. So you add up this and 112,500. 2,02,500. But is this for the entire house? Yes. So now you divide it for 1/3. Everyone divide by 3. So can I take here 67? Yes, 67,500 is my interest here. So everyone do this maths and keep it ready. 67,500 is the loss. What is the SOP limit? 2 lakh. What is the SOP limit, guys? 2 lakh. And is this construction? So 2 lakh. If it was repair, 30,000. All right. And what is the balance interest? 2 lakh to 500 divided by 3 into 2. 1,35,000. So now, guys, what have they asked you for? Deduction in respect of interest on loan. So 1,35,000 plus 67,500. What is the total? 2,02,500. Okay. What if they had said that deduction of interest for SOP? Then you have to divide it. That is 1/3. For LOP, that is 2/3. Are we okay? Everyone. So one done, second done, third. Compute what? Total income. For that, let's go back. We've got one SOP loss of how much? 67,500. That is final. So I am just putting that in as a highlight. It's final. Now for LOP, we are at which number right now? 2 lakh. Yeah. So 2 lakh minus 16,000. 1,84,000. From that, guys, 30%. And keep writing it also 50 because we'll have to present this question. It's 55,200. How much is that? No, sorry. And also we have to minus interest. What is the interest you'll minus? 1,35,000. So 1,84,000 minus 55,200 minus 1,35,000. How much is that? Loss of 6,200. One loss, second loss. Add both the losses. 67,500 and 6,200. So my loss from house property is how much? 73,700. Is there some other income also? Yes. Other income is how much? 2 lakh. Can you minus? Yes, because in the old regime, guys, it's friendly. It can go outside up to how many lakh? 2 lakh. So you minus it. 1,26,300. This is the number, guys, here. Let's check. 67,500 is right. Other income. She wishes to opt for. Oh, my bad. Like she wishes to opt for. No problem. Let's change it. In the default tax regime, NAV still remains the same. Yes. Now here, you will not get interest for SOP. Yes. So everyone, what is the total interest? Take it on your calculator, 2 lakh 2,500. Divide by 3 into 2. So your answer will be 1 lakh 35. Why your answer will be 1 lakh 35? Yes. So SOP interest you will not. Now, if SOP interest you don't get, so this will be 0. This is a loss of. And 6,200, can it be set off? We discussed it 1 hour back, guys. In the new regime, can your loss be set off? It become non-friendly. Yes. So can it be minus? No. So what is your income, guys? 2 lakh. All right, everyone. Okay. It's good. So, guys, 2 chapters which we have very confidently done. One is residential status. One is house property. Also, this one we've done. One is rates of tax also, because we've done default. Then we did a good sum on salaries also. So, about 3-4 chapters. Which one? Which other? Capital gains also we did a few 1-2 questions, but one complicated question also we did. So that's a good win. This is which paper? September 24. I'm just writing here that we've done it. So question number 1, MCQ. Yes, 20 highlights, guys, and you will see a difference in your preparation already. All right. So this is it. Let's take Jan 25. I hope it's not a PDF. Perfect. This is an agriculture income, guys. Very unlikely. Yes, very interesting. How many marks here? 2 marks. How many marks again? How many marks again? 2. As we've not done agriculture income as a revision, but this could be a good revision. So let's recap. Agriculture income, the government says, listen, dear farmers, please enjoy their income. It is exempt under section 10(1). But guys, depends RAL and UL. RAL, everything is exempt. Even if you sell the land, it is not taxable. But UL, if it is any sale or if it's an income from farm building, then it is taxable. That's the difference. Now, what do you mean by urban? Of course, Bangalore, Mumbai is urban, up to 8 kilometers, up to 6, up to 2, up to 0, it's urban. And if you have some specular income like coffee, tea, rubber, etc., some percentage is PGBP, some is exempt. And if you transfer, example, I'm growing potatoes and making chips from it, then it has to be at market value. And if they ask you for tax, then remember that if you're smart enough to earn agriculture income also and taxable income, then you might be scammed. That's called scheme of partial integration. You already have a video on it. I cannot pamper you with more videos. So watch that video, revise to handwritten notes and keep revising, because you cannot come here 1 month before the exam expecting to do the entire DT. I'm expecting you to have revised it and then come here. Yes. All right. We answered this question already. Watch from the starting of this video. You'll understand it. Yes. Guys, you know indexation. Can you answer it? It is applicable for what? Land and building. We have discussed this. We have also answered this on the tax dot solving group. Please be active part and not a selective part of the discussions. All right. Any land and building. Any land and building. All right. Here it is, guys. This is a guy who is selling some sugar cane. There is mulberry. There is silkworms. There is cocoon, sale of paddy. All of this. And we need to find out some incomes here. Yes. It might sound like it's difficult, but honestly, it's not too difficult. Take it up. We have 12 good minutes to answer this MCQ. Yes. Let's try and see how much time we take. It's right now 5:55, 5:55. We'll see if we can get an answer by 6:10. Over to you all. Start reading, please. And don't read, guys, without a rough paper. Rough paper has to be there and you read while you take some notes. Yes. Over to you. We're almost becoming farmers and answering. Very smart farmer is growing rice, paddy, sugarcane, mulberry, also making silk out of it. But the government only likes one culture, which is agriculture. Another shortcut, if you remember, long back. So we'll try and see. Perfect. We've just been in this sum for 3 minutes. Now we still have 9-10 minutes, guys. No problem. Let's see. Guys, what kind of land is this? Rural agriculture land. He has a big land, 35 acres, doesn't matter. 20 kilometers from nearest town, doesn't matter. They've mentioned it that it's a rural agriculture land. He's cultivating three things. First is paddy. Second is sugarcane. Third is mulberry. Do all these things grow? Yes. If you grow anything and you sell, that entire income is exempt. But in mulberry, he is using some of this mulberry to go to a silk farm where he is doing some silk cocoons and then selling outside. That transaction is actually business. And the transaction transfer should happen in market value. So I have made three parts here. First is paddy, then is sugarcane, then is mulberry. All three are exempt. All three are exempt. And then taxable is a silk cocoon thing. Let's talk about first paddy. During the financial year 23-24, Anand has a net income of 4 lakh from sale of paddy. Is it exempt? Yes. Next 3 lakh net income from the sale of sugarcane. Is this also exempt? Yes. And 75,000 by selling mulberry leaves alone. Is this also exempt? Yes. But not just selling mulberry leaves, he's also sending some mulberries to his own silkworm production. That is worth how many thousand? 50. So 75 plus 50. Everyone, 75 plus 50. This is 1,25,000. All these incomes typically are exempt because the government says all this has a nature of agriculture. But what about silk cocoons? Now he had done some silkworm production, and this silkworm production he's selling it for how many lakh? 3,75,000. His cost of doing the silkworm is 2 lakh, and his cost, don't forget this 50,000 also. This is also his cost because he has to get the mulberry for the silkworm. So you will minus this 3,75,000 minus 2,50,000 is how much, guys? 1,25,000. Is this taxable? Yes. Also, I'm sure they've not asked this question, but will he be subject to scam or partial integration? Guys, does he have agriculture income? Does he have taxable income? But taxable income is not more than basic exemption limit as of now. So he might not be subject to scam in case they ask. Let's start. Guys, we can even take a tea break, come back and answer, and still we'll be in time. Yes, that's the kind of confidence you should have on sub-chapters you are strong at. Paddy income of 4 lakh alone is exempt. Is that true? Sugarcane income of 3 lakh, paddy income of 4 lakh will be constituting as agriculture income. Sale of mulberry leaves amounting to 75,000, paddy income of 4 lakh, sugarcane income of 3,50,000. Almost looks like the right answer, except yes. So now paddy income of 4 lakh, everyone. Yes. Sugarcane income of 3,50,000 and sale of mulberry leaves of how much? All constitute agriculture income, which is the right answer, guys. D. Yes. Okay. Next. What is this? Answer the following. The sale of mulberry leaves of 75,000 will not constitute as agriculture income. Is that true? Entire mulberry leaves will be constituting agriculture income. The amount of 3,75,000 being sale proceeds of silk cocoons will constitute as agriculture income. No. Net income from production of silk cocoons 1,75,000 is exempt. No. Silk is not the only culture which we like, agriculture. Net income from sale of silk cocoons amounting to how much? 1,25,000. Is that what we got? Yes. Will not be treated as agriculture income and will be taxed either as business income or as IFRS. What is the answer, guys? D. Now, entire amount of agriculture income. Can you total up the agriculture income, guys? Everyone, take your calculators. 4 lakh plus 3,50,000 plus 1,25,000 is 8,75,000. Let's see what is the MCQ here. The entire amount of agriculture income of Mr. Anand will be how many lakh? No, sorry, that's not right. Agriculture income will be, whereas 1,25,000 will be absolutely right. Let's see the other one also. Agriculture income is, no, sorry, my bad. We got answer of how many lakh? 75. So this is not right. Agriculture income will be, and non-agriculture will be. Is it the right answer? Yes. 6 marks. Congratulations. And 6 minutes spare. Yes. And I have not answered this, guys. I have explained it to you all. So please understand, every time you see a mulberry, sugarcane, etc., and you want to confuse yourself, try and get to an answer with logic, and you will find the answer here. This, the only tricky part was this one, guys. Do you see this 50,000? Guys, this 50,000 people have forgotten. Why? Because they've forgotten that they have sent this goods to their silk factory. So that has to be done as an income also, as an expense also. Yes. Yep. Yep. All that doesn't matter. I'm just telling you. See, business PGBP and IFOS is like your house and your second house. It's like one bedroom and the other bedroom. I'm telling you, this lecture income could be IFOS, could be PGBP. There is no difference at all. Only thing is, if it's done as a regular business, PGBP, if it's done selectively, IFOS, not important from exam perspective. Yes. All right. Perfect. Guys, this is where we take another small break, 5 minutes, and then we'll continue. We'll have one more leg, about 1.5 hours, about 7:30ish. We should try to end it. This is another question. Let's put all the questions so we know what we've done. This is question from which paper? Jan 25. Question number 1, 2, 3, Jan 25 MCQs. And all these questions, many of them we've not done. So this is a good thing that we are doing it right now. All right. Any questions, put them in the chat box. Otherwise, guys, we'll back in 5-10 minutes and we'll continue. It's about 8:05, about 8:10ish we'll be back. Sorry, 6:05, 6:10ish we'll be back, about 6-7 minutes. Relax and then we'll continue. You all want to go eat something and come back, or बाद में करेंगे? For a decent time pay, we'll end it. All right, we're back, and after doing some good questions, some MCQs, which I hope it'll helping you. And this is a different take, a fresh take, and a division through sums. Let's try and do a few more. And this time, let's target maybe the question number one, maybe, because from that, guys, we'll be able to do a lot of rates of tax, PGBP, etc. So let's try and see a question here. Here we go. November 22. This is Rohan. We've done this in class, so we'll not do this. Let's do May 23. Yeah, this could be a good question. Let me see. Yeah. Very nice. Very good question. Let's try and see this, and let's see if we can maintain the timeline also. And if there's some important concept, we'll try and recap the concept also right here. All right. Here we go. This is a question. We'll never read the question like this, just like that. We'll always write it with some rough work. So if you can take a rough paper and start with me. This is question number 1, May 23 paper. Guys, this is the part where a lot of students tell me, sir, I am unable to do computation of income. Then you got to pay a little extra attention to this one. Question number 1. This is May 23 ICI paper. And whatever you'll need has to be summarized here, right from the financial year to the age. This is rough work. Let's start. Let's go. It's right now 6:18. We get about 30 minutes, maybe 35 minutes to do this sum. Let's see how well we do this. Guys, the person is Bhasin. He's 52 years old. Everyone write B here. And quickly write that he's 52 years old. And also write the year. The year is 22-23. Previous year, 22-23. I know PGBP will be dominating it, so I'm writing PGBP, and any others also we'll keep adding, but PGBP is the one that is the dominating one here. Mr. Bhasin is a resident individual, 52 years old, provides management consultancy services to various corporates, income and expenditure account. They've already done. So thank you so much for doing this hard work. So we can straight pick up the final number, which is 36,97,500. Everyone, this is the number, the profit number. Just write P, 36,97,500. People, don't be a spectator, really. Otherwise, this will not work. You have to do this with me. Now, we will read, and if there's a mistake, we'll correct it. Gross receipts. From last year is 75 lakhs. No TDS was deducted from any of the receipts. 60 lakhs, 60,000. Is that perfectly okay? Next, interest, winnings, and rent. All of them don't belong to PGBP. They're in the wrong room. So let's remove. First, we'll remove interest. So quickly, you'll go here and write interest. 25,000. You'll remove from here. You'll make another column of IFOS immediately and write 25,000 there. Next is winnings from lotteries. Net of costs of lottery tickets. This is 99,500. So we'll remove it again. Casual income. 99,500. But when it comes to IFOS, we cannot only tax 99,500. There is no net of cost. If you gotten lucky on 1 lakh, the government also wants to get lucky on 1 lakh. So you'll write casual income 1 lakh. And remember, this 1 lakh will be taxed at what rate? 30%. Keep that number in mind. Okay. Next, rent received 2,40,000. We'll remove it from here. This is rent. 2,40,000. You'll minus it from here. And you'll put another column IFHP and you'll write 2,40,000. I don't know if it's the final number or do we have to minus it. Let's see the word. Computed is not written, so we might have to minus municipal tax and a deduction, interest, etc. But good progress till now. I'm reading the expenses. See if Mr. Bhasin is making the right expenses. Employees remuneration, okay. Office expense, okay. Rates and taxes, okay. Interest is okay. Office rent is okay. Insurance premium is okay. Professional fees. Guys, Mr. Bhasin does everything well. Everything looks good till now. But let's move ahead. What's that? Yes. The following details relate to the year 22-23. Employee's remuneration includes a sum of 3 lakh paid to his wife, Mrs. Beena. Guys, there's nothing illegal in paying salary to your wife as long as she's working. But if she's not, that's a problem. Who is working as a manager in his office? She does not have any technical or professional qualification or experience required for the job. The payment of salary was as per market rates in comparison to similar work profile. But guys, she does not have the qualification. So are you paying just like that to her? Yes. So in that case, if you pay something like that, this is excessive expense to a relative. And we have different shortcuts for it. We have EPS also. I don't know what I've taught you, but is this an excessive expense? Yes. To whom? Relative. So the entire 3 lakh will not be allowed. You'll have to add it back. So you can write here, everyone, very quickly, go back to your rough work and write expense, which is excessive, and 3 lakh. They have minused it. You have to add it. Now you might argue that, sir, what if she does not have the qualification? She can still work. Yes, but that's the rule. As per the law, if you don't have the qualification or the experience, then you have to add it back. Here you clearly have to add it back. All right. Every step gets you marks. The next one. Mr. Basin owns a big house. Congratulations. With how many units? 2 units. Unit 1 is been let out for residential purpose at a monthly rent of 20,000. And unit 2 is used by Mr. Basin as his residence. So it's a SOP, residence cum office. Other particulars. So all this detail I'm not going to do right now. Whenever we finish PGBP, we'll look at IFHP. So I'm keeping this as pending, because if you spread yourself too much, then you'll be confused. So the entire IFHP will do in some time from now. Rates and taxes include means I've already minused a sum of 10,000 paid as municipal taxes on the house. So you minus it in PGBP, but it belongs to house. So this rates and taxes, you minus it. So you have to add it. Everyone go here, write municipal tax. You're minus it by mistake, so you'll add 10,000. And in IFHP, you will write municipal tax 10,000. What we'll do later is different, because it's rough work. You can write it like this. Municipal tax should be minus your 10,000. Next. Interest expenses represent interest on capital borrowed from a nationalized bank for the construction of the house. Guys, again, this is for house. This is my interest expense, 80,000. I minus it in PGBP, but they are saying it's not connected to the business. It's connected to your house. The construction was completed. Neither this also and this also, both are pending, because this also belongs to PGBP, no IFHP. This interest 80,000. I'll have to add it back. You can go here. Interest on house property 80,000, and you'll have to add it back. I'm just parking it here. Interest they are saying is 80,000. When we do IFHP, we'll do all of this. Don't worry. So this was also done. Next, based on the actual rent received for unit 1, Mr. Basin has debited 2,40,000 as notional rent for unit 2, which is used for his profession. Now I'll tell you guys. Example, today I'm taking the lecture from here. Tomorrow I might take the lecture from home. So I might say, oh, I'm taking it from home, so I'm going to take it as a business expense. No, this notional expense does not work. Either you take an office on rent and that expense will give you as a deduction. So either I take this class on rent and I can take a deduction, or I don't take a deduction. You cannot have a notional expense. Tomorrow I can have notional coffee expense, notional laptop expense. No, there is no notional expense. Have you already minused it? Yes. How much have you minused? 2,40,000. You'll have to add it back. So this notional rent, you can write notional rent is not allowed a deduction. You'll add it back. Notional is like assumed. You cannot assume expenses. Otherwise, for the government, it will be a big problem. Every time you have profit, you'll assume expenses and you'll minus it. So notional rent, you have to add it back. Perfect. Next, the expense on insurance premium of 72,000. So have we minus some insurance premium? Yes, 72,000. We assumed it was for business, but they are saying it's for his father. No, it's for Mr. Basin only, for his spouse and his 2 children. Clearly not business. So we'll have to add it back. Everyone go back here and write insurance premium, which is personal, and 72,000 you'll add it back. But before we forget, as if you take medical insurance premium, you get a deduction under section 80D. So somewhere here at the rough page, you'll write GTI, and from GTI you'll minus 80D deduction. Basin is how many years old? You can just go and check here. 52. If he's 52 and there's no one who's senior citizen, guys, here, then the maximum amount you can minus is 25,000. But this 72 is for 3 years. Remember, guys, again revision. If it's for 3 years, you always divide by +1. So this 3 will be divided by 4. So 72,000 divided by 4. 18,000 is your expense. Can I take a deduction for 18,000? Yes. You will go 80D and you will minus 18,000. All right. We'll continue. This is a very, very good sum that we are trying to do. The expenses on professional fees, which includes a sum of 1 lakh paid to Mr. Ronak. So the professional fee expense, which is here, 2 lakh. Out of that, 1 lakh has a problem on which tax has not been deducted. He's an Indian resident. The government gets angry here. Guys, remember, if you pay without TDS, the government gets 30% angry. So on 1 lakh, 30% is 30,000. Why am I even using a calculator? That 30,000 has to be added back. Yes. So you will go here. and you will write TDS issue. Yes, disallowances. So you will add back 30. Everyone go back and add 30,000. You can write TDS issue. So in the fair, when we write, we will say 30% disallow. All right. Next, guys, we've reached here 7.89. There are only 2 more points. There was only one block containing computers. Now, when they're talking about this, I know they're talking about depreciation. They've already minus depreciation, I think. Depreciation they've taken as 1,20,000. We'll calculate it. If it's wrong, we'll correct it. Which came into existence only on 2nd April 2022. Is it this year only? Check your year. 223. So this year only, guys, you bought the computers when new laptops for 1,60,000, printers and scanner 40,000 were purchased. So 1,60,000 plus 40 is 2 lakh worth of goods you have. He charged depreciation at 60% on the entire cost of 2 lakh. Is it okay, guys? No, the maximum depreciation is only 40. So 2 lakh into 40% is 80,000. You have minus by mistake 1,20,000. So have you minus excess depreciation? Yes, so you'll have to add it back. So you go here and write excess debt, which is 40,000. You add it back. Sir, but you did not check for additional debt. Yes, in exam, mostly you will not get additional debt. Only if it's a power or manufacturer, then you have to check for additional debt. That too, in one of the exams, they said he's a manufacturer, but they said ignore additional debt. All right. Next, by the way, additional debt is not available in the new default tax regime. Next, Mr. Basin had taken a loan of 5 lakh from a nationalized bank for the education of his son. This is so common. Section 80E, E for education. If you take an education loan for either yourself, your spouse, for your children, then that interest is allowed as a deduction, not the principal. So not the principal. Principal you can get lost. 40,000 interest, that will get a deduction under 80E. So please go here and write 80E and you can minus 40,000. Perfect, perfect, perfect. This is it. You're required to compute the total income under the proper heads of income, assuming under the regular provisions, assuming that he has not opted for 115 BSc. Perfect, guys. Life is good. It's the old scheme again. So we'll continue. Now, I think everything is okay here, except the pending points, which is IFHP. Let's try and do IFHP well now. Now, in IFHP, he has 2 units. Unit 1, which is rented out. So everyone go to IFHP. And if you have some space here, we'll make 2 calculations, the SOP calculation and the LOP calculation. Let's first do the SOP calculation. He is staying in their house, so it is 0, 0, 0. Everyone, you always also write 0, 0, 0. And you will minus interest. And let's see what is the interest actually. He's staying in this house, etc. Interest expense include interest on capital borrowed from a nationalized bank for construction. There is pre-construction also. The construction got over in 10-11, guys. Enjoy. If the construction got over in 10-11, guys, the 5 years, are they already over? Yes. So you don't have to worry about PCP. You have to only worry about current year interest. So current year interest is how much? The entire amount is current year interest, which is 80,000. But I can't take the entire 80 because he has divided the house 50-50%. So I'm going to SOP. I'm writing 50%. 80, 50% is how many thousand? 40,000. So I'm minusing 40,000. This is my SOP loss, 40,000. Because it is construction. If I had seen the word repair, then this would be limited to 30,000. Good answers here. So 40,000 now LOP. LOP, we take the actual rent. How much is he renting this out for? It's renting for 20,000 for the entire year monthly rent. So 20,000 into 12 is 2,40,000. You'll put 2,40,000 here, actual rent. There is no expected rent I see. So that is the actual rent only. From that, guys, this becomes my GAV also. So I'm just cancelling actual rent because it's rough work. So write GAV. MSI. Already, this is a new shortcut. Municipal tax. Now, what is the municipal tax? 10,000, but you can only minus 5. So you'll minus 5. Just check. Has it been paid and all? Yes, because it has been paid. Rates and tax include a sum of 10,000 paid as municipal tax. So 5,000 will minus from 2,40,000. That is 2,35,000. From 2,35,000, guys, everyone standard deduction 30%. 70,500 you will minus. And from that, guys, interest. Now half interest is here, so you'll get only half interest. So 40,000. So final answer is 1,24,500. This is my profit. This is my loss. I'm removing these numbers because they should not confuse you. Everyone remove this number, remove this number, remove this number. Now from 1,24,500 you minus 40,000, you'll get the final answer, which is 84,500. All right. Now that we've got this, guys, it's all good to total it up. So try and total it up. From this number, we'll total from 36,97,500 minus 25,000. Oh, by the way, the pending points have been done, right? Interest, yes, everything. Oh no, we had this expected rent. My bad, guys. Everyone, my bad. I'm happy to do this again. Calculation only for LOP. This is my actual rent, 2,40,000. Now let's see my expected rent. Guys, expected rent, a municipal value is 3,60,000, fair rent is 4,20,000, which is higher, 4,20,000, but limited to 4 lakh. But this is for the whole house, so I have to take 2 lakh. So this is 4 lakh, this is 2 lakh. So still, guys, I'm right. 2,40,000 minus 5, 2,35,000 minus 30% minus 40,000, and final number is what, guys? 1,24,500. And you set it off. What is the final number? 2,35,000 into 30% minus 40,000 minus 40,000. How much is that, guys? 84,500. Now this is final. Put them in a circle. 84,500. This 1,25,000 is final. Put that also in a circle. All rough work, guys. And get the PGBP number now. 36,97,500 minus 25 minus 99,500 minus 2,40,000 plus 3 lakh plus 10,000 plus 80,000 plus 2,40,000 plus 72 plus 30 plus 40. Excellent. The number is 41,05,000. This is my number, 41,05,000. This also is in a box. So 41,05,000 plus 1,25,000 plus 84,500. This gives you 43,14,500. Always check for hidden adjustments, guys. Here, any TTA? Is there any interest here on savings account? Yes. Did we just miss that? Yes, there was interest on savings bank account. And what is his age? 52. So we have missed that, but we'll write it now. There is 80 TTA. 10,000. You can take a deduction. So I'm writing here 80 TTA. And I'm writing 10,000. Always check for 3 deductions: TTA, TTB, and ATGG. These 3 deductions you should minus. Minus it, guys. 43,14,500 minus 18,000 minus 40,000 minus 10,000. 42,46,500 is great. This is your number. Ideally, guys, tax would have been simple, but here there is a small amount which is casual income. So we'll separate only in 2 parts. Yes, everyone, separate into 2 parts. What is your casual income? 1 lakh. So put 1 lakh, and this is 41,46,500. Let's calculate the tax. Very, very simple. Tax. Let's put the numbers 0, 12,500, 1 lakh, and on 31,46,500 into 30%, 9,43,950. You total it up, it's 10,56,450. And on this there is 30%, no mercy here, 30,000. You add up both these numbers, you get 10,86,450. From that you add 4%. Oh, by the way, any surcharge? Guys, your total income is 42 lakh. Only if it increases more than 50 lakh there is surcharge. So there is no surcharge. So into 4%. You will add and tell me the final number. So surcharge, no, all tax is seen on total income. All the tax, basic tax, surcharge, everything is seen on total income. So you'll add all of this and get the final number, which is 11,29,908 will become 910. Great. So now we gotta present this. I know it's very comfortable to do this, but if you present it, guys, your confidence levels will increase. and we'll write working notes, etc. as well, and let's try and finish it well. I know this is a sum that we've not done in class, so most of you guys have not solved it ever. It's a good thing to solve it now. Yes. Rough work will be something that is going to be next to you, and you will write computation of total income and tax liability of Mr. Bhasin for previous year 22-23, assessment year 23-24. Particulars amount. We have to start in the same order that we study. So the first head of income is salaries, which is not there. The next one is IFHP. So we have to look at IFHP. You have to present it in the same order as Income Tax Act as presented. First is SOP, 50%. GAV 0 less interest, 80,000 into 50%, that is 40,000. Then is LOP 50%, actual rent 20,000 into 12, 2,40,000. Or expected rent 2 lakh, whichever is higher, so that becomes 2,40,000 less municipal tax 10,000, everything has 50%, 2,35,000 less standard deduction 30%, 70,500. Guys, ideally when you do this final presentation, you don't have to do any new calculation. Everything is there, you just have to copy. Less interest. All these have sections, you know, 24A, 24B. $1,24,500. This is A, this is B. Therefore, income from house property is 84,500. The final numbers in the outer column always. Next, PGBP. Profit as computed 36,97,500. Try on all the plus together and minuses together. So I'm doing the minus first. Less incomes not taxable under PGBP. First one, interest. Second one, casual income. Third one, rent earned. As computed, as computed in the sum or as given भी लिख सकते हो, no problem. Profit as given. Casual income is 1 lakh. All that has to be minus, and rent is 2,40,000. Add expenses, disallow. First, TDS not deducted. Whatever I remember, guys, I'll write that. TDS not deducted, 30%. That is 30,000. Excess debt. How excess debt? You'll have to show 2 lakh into 40% versus 1,20,000. So excess debt is 40,000. Personal expenses 72,000. Rates and taxes. So municipal tax for house property 10,000. Anything else? Let me check. We've done excess debt, we've written TDS, we've written insurance premium, we've written not notional rent. We'll have to see. Interest, have to see. Municipal tax is there. And expense. General expenses, why 3 lakh have we added? You remember? 1 second. Let's check. What is a 3 lakh amount? Hey, question hai. 3 lakh, 3 lakh, 3 lakh. Yes. Paid to wife without qualification. Yes. Excess. Okay. I'm going to the next page because it's not fitting here. So those 3-4 expenses we'll put on the next page. The last one for me was 0.4, 0.5. Excessive expense in bracket salary to spouse disallowed. All these are sections, guys. 40A2. There are some important sections at the end of every chapter. Top 50 sections already there on the drive. Please look at that. So this is 3 lakh. Interest for house property 80,000. Anything else that we're missing out on? Check your rough work now, one sec. Interest and notional rent. Notional rent disallowed. How much is the notional rent disallowed? 2,40,000. Therefore, PGBP, can you tell me the number in PGBP? 5,000. Next is IFOS. One is interest on savings account. I think interest was 25,000. Casual income 1 lakh. So 1,25,000. Therefore, gross total income 43,14,500. Less. This is where you get marks. This is 80D insurance premium, but 72,000 divided by 4, 18,000. Then 80 TTA up to 10,000. Then 80E interest on education loan 40,000. $42, 46, 500. This is therefore total income. Now, guys, tax liability. The one which is sure, casual income, always take that 1 lakh into 30%. Take that first. Balance on slabs or slab rates. You can show it in different lines. I'm showing it together here. 12,500. 1 lakh. 9 lakh. 950. Just 1 second. 1056, 450. You add both. 1076, 450 is my basic tax. HEC 1076 or 1086, sorry, 1086. 4%, and final number is what? 11,29,910. 11,29,910. Remember guys, here even if there is one mistake here and there, of course your entire sum will go haywire, but you'll still get marks. So don't get disappointed if one thing is wrong. You come out of the exam hall, then you spoil the next paper. Don't do that. So if one thing is also wrong, there are a lot of steps. Example, even if my GTI is wrong, but 80D, 80DTA, 80 is right, then you will get your data. So deductions always do it, because even if the entire sum is wrong, these deductions will get you the marks. Then tax liability calculation might go wrong, but you still get marks for your steps. That's how ICI corrects it. And by the way guys, no one's asked for it, but I'm still telling you, no negative markings at all. So don't get confused with the rumors of negative markings. I have clarified it multiple sources. That's only some misinterpretation of the way it's corrected, but there are no negative markings. Yes, I think this is question number 5 or 6. I have lost count. Yes, but it took us, surprisingly, we started at about 6, I think 18 or 6:20, and we've actually presented it also well. And we finished it in the good amount of time. I think this is the progress that I'm looking for, that if we can do more and more sums, it also impacts our speed, and you will see this also reflecting in your exam. Yes, so this is another question, ending it here. But the problem is, I think we follow too many pages. And no, I'll tell you what happens is, so it's a very simple thing. When I speak to some people who do well in CA course, they don't follow all these negative pages. So what happens is, when you follow and then every time there's something you need to think about it, then it's not your responsibility. Your responsibility is, there is an exam, the books are there is a faculty you can reach out to, there's an academy you can reach out to. So this rumor mongering, impacts negatively. You might not realize it, but it happens. And that's how we have two sets of people in the world. One are optimistic, happy people, and one are negative, pessimistic people. That's how students also become. One are optimistic, happy students, not happiest students, because studying is never a happiest thing to do, but optimistic students, that this is the portion, I'll finish and I'll do it. And one become very negative, negative students, because they see all of that. And I feel, even if it's a half mark negative, if your paper is so bad that a half mark can fail you, then you are not studying well. You should be confident that even if it's a half mark mistake, even if they don't correct me for half a mark, you should still be able to sail through. That should be the confidence that you should have. And the confidence is not unnatural. It's not like a confidence of Rakhi Sawan. It's very given. I know the chapter that residential status will come. Now, if I structure it well, study it well, then it can give you that kind of confidence. Yes. All right. So on that note, guys, we are looking at one more sum now, immediately, without taking a break, because we've just taken one. This was which paper? May 23. Question number 1. This was May 23. All right. This is also done. Now, guys, we'll do a few more, but let's try and get some variety. I will do TDS tomorrow. Return of income tomorrow sums. We've done in this sum salaries. We've done a few on one sum. This was PGBP. We've done sums. Set off. Let's try and do a set off sum. Let's try and do a new paper so that you get an idea of new paper set off sum. So we'll take September 25. Yes. So guys, we did about 5-7 sums, discussion, etc. That's happened in about, the recording has been on for about 3.5 hours. Imagine guys, just solving sums for 2 days. What a major impact and what a level up it can get your results. And of course, you'll feel exhausted out of every sum, but that's how it is. But the best part is, you get exhausted right now. It'll be easier in the exam to do it. Most people just study, and then the exam they give the paper and they write the sums for almost the first time. This is a really good sum on 6 marks on capital gain. I have already discussed this indexation concept. I want all of you all to try this concept and get me an answer. They want you to find out, advise money about which option of computation of capital gain is more suitable for him as far as his tax liability is concerned, on the assumption that he has no other income chargeable to tax. So first you'll find out the income, no indexation. Then you'll do both the option 12.5% also and I-20 also, and get me one answer. This is question number 3A, September 25. We'll also present it if we can. Have we done this in our... Okay, let's try. If not, we'll do it in rough work and then we'll leave it there, guys. Over to you all, everyone. 2-3 minutes, 5 minutes, please try. Yes, everyone should be doing this. Yes, don't wait for me because I'm waiting for you. So let's see if you're going this right direction. Mr. Money is an individual in HUF. He is 45 years, has a plot of land, and 2002 he bought it for 12 lakh 25, paid stamp duty value of 1 lakh. So basically, the land is for 13 lakh 25. He sold this land for 80 lakh. Stamp duty value is 83 lakh 50. Which value will you take as sale consideration? 80 lakhs. So perfect. So we start with 80 lakhs. There is no expenses on transfer. What is your purchase price? Plus 1 lakh. Is it before 1/4/2001? No. So there is no logic of old fashioned etc. So we'll take 13 lakh 25,000 and we'll minus it here 13 lakh 25. What is the balance? So minus 80 lakh. What is the number you're getting? 66 lakh 75,000. This is my long-term capital gain. No indexation, no indexation. So if they ask you the question, find out long-term capital gain, this is your answer. People who ask me hundreds of times, sir, on which indexation, this is the question that you have to listen to. Yes. All right. Now, when you're paying taxes, you have two options, A and B. This on this into 12.5%, which is 8,34,375. Or you have another option of I-20, but for that, the cost will change. So 13 lakh 25,000 divided by 2023. What is 2000? No, this is 2001 2 because it was bought in March 20. So nice question, guys. March 2002 is actually 1 2. So divided by 100 into you're selling this land in the year 2024. So into 363. Yes. So your cost will change to 48 lakh 9,750. My selling price is still 80 lakh. So 80 lakh minus this is 31 lakh 90,250. Now this is my profit into 20% because I-20, that is 6 lakh 38,050. Who can do this two options? If you're an individual HUF, you're selling land and building, bought before 2004, 23rd July 2024 and sold after that. So this is the classic case, and this happened in the year September 25 when this was really hot. This was a concept that was expected in the exam. No, abhi nahi milega. It was only because that rule changed that time. So that is the case. So it has to be purchased before 23rd July 2024 and sold after that. Perfect. No, but now people know the rule, right? So example, let's say there was no rule of two helmets before. Now suddenly if they made a helmet rule, that changed. Someone who's riding the bike, for them that changed. Now you know that two helmets is the rule. So you'll always, so now you know that I'm going to pay on long-term capital gain 12.5. And it's not bad. 12.5 is a very low rate. Internationally, globally, people pay more tax. It's only 12.5. Yes. Anyways, guys, this is the question. Recent question. Just have a look. This is a person called Surabh. 6 marks. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 incomes. 2 losses here. Compute gross total income of Surabh under appropriate income. Will your answer be different if she does not offer? That means you have to give both default as well as old. Let's focus the energies first on the old one and let's do this as per old one. Remember, there can be so many losses. Salaries, no loss. House property can go to any head up to 2 lakh. Business loss cannot go to salaries except where it can go anywhere else. Speculative and specified cannot go anywhere. Capital loss is non-friendly, it cannot go outside. And OM horses also cannot go outside. You can go outside, but you have to be in the same head and try this. Make the diagram which we used to make in class and take some time and do this, and then we'll solve it. We'll also sell one and fair so that we have an idea of how this is done. You will do as per the old scheme, then I'll teach you as per the new one, and then we'll make sure that we get the marks here. Over to you. Just one second. I want to write down which question we just did. So this is question number 3A, September 25. Okay. Let's continue. The moment you start making that diagram with 5 arrows, 5 heads of income, things will fall into place. Give it the right symbol. If it's a unique blood, put a star mark. And if it's being carried forward, then quarantine stamp. Nice, nice. He's cleared. He's just here just to check out. Good, Sai. Let's see if you still are remembering the sums. Yeah, done. So 1, 2, 3, 4, 5. We move to the next ones. I'm keeping the third one here. Try 2 minutes. Of course, we'll do it together as well. This would be almost the last sum that we do, and we'll pick it up. More chapters, more sums tomorrow. All right, let's try and see if you're able to solve it because there are both. So first we'll do as per the old and then I'll teach you how to do as per the new. You don't have to do the entire thing again. Yes. But ideally this is done best if you can make these arrows. And since there are too many, I'll go to a new page and we'll do it on a new page here. Okay. This is question number 4A of September 25 paper. Very recent papers, guys, here. Question number 4A. This is September 25. And let's say if you see a question like this, how will you attempt it? You'll first only make this rough work and download all the details without thinking. Should be a resident individual, 35 years, working partner in 2 firms, engaged in retail business of garments. She provides the following details of her income and loss for the 31st March 2025. So the year is 24-25. All right. Let's start. Remuneration received as a partner from a partnership firm, 9.7 lakhs. Guys, this is P salary. P salaries always goes under PGBP. So I'm taking it. This is the first trick thing, but now you know this. So PGBP, this is P salary, and this is normal, obviously. 9 lakh 70 is what it is here. So this is 9,70,000. Next, loss from intraday trading in shares of Indian companies listed on the recognized stock exchange, no delivery. As if you remember, there are three kinds of businesses. One is normal business. One is speculative. If you buy and sell without taking delivery, that's speculative. So this 4 lakh rupees loss is from speculative. So here we go. You will write speculative business. This 4 lakh rupee loss. And you will put a unique blood symbol here because it cannot be set off against any other except speculative. Next, income from activity of owning and maintaining race horses is not a loss, this is an income. So you will go to IFOS. And there it is OM horses. And it is 7 lakh. Long-term capital gain on sale of property as computed as per the provision of the Income Tax Act, 9.2 lakhs. That's long-term capital gain. It's not a loss again. So long-term capital gain, I'm putting it here. 9.2 lakhs. All right. Next, interest paid on loan taken for repair of self-occupied house. This is interest paid. It's a SOP. In SOP, you can get maximum. This is for repairs, so maximum 30,000. It's also written there. The person who's given me the paper. So this is SOP, and there's a loss of 30,000. Next, amount received as advance towards sale of shop, which was later forfeited by the buyer, could not comply. This is again your income, guys. Yes, so if someone gives you money and they do not take it, then it's your income. It goes under IFOS. This is 5 lakh or forfeiture. So it goes to IFOS. This is forfeiture, 5 lakh. So 5 and 7. This is right now 12 lakh. Next, share of loss from partnership firm. See, partnership firm, if they have a profit, you don't be taxed, do not tax on it. And if there's a loss also, that's not yours. That's partnership firms. So this will be ignored. It's a working note. You can write here working note and partnership firm loss. Yeah, that share of loss from partnership firm is an exempt activity. So no set off. Next, loss on betting. Guys, if you bet and you lose, then it's your problem, not the government's. So this is loss on betting. We have a joke also about it that if you cry, you'll have to cry alone. But if you open champagne bottle, then the government is with you. Next, interest on FD. 80,000. The fixed deposit of 10 lakhs was gifted to her by her father-in-law. Now 1 minute, guys. There is a lady, Sourabh. Her father-in-law gave her an FD. Guys, remember clubbing of income. This has some part of clubbing of income. The father-in-law gave, so from according to the father-in-law, it's the son's wife. If you gift it to your son's wife, the interest will go back to father-in-law. So this interest of 80,000 will not be taxed. It will go back to father-in-law. So whoever gave me this paper has done this wrong. Yes, because this will go to father-in-law. Yes, this will not come in your FD. Long-term capital loss on sale of unlisted shares, 3.8 lakh. It's a loss, last year's loss. So I'm writing here long-term capital gain. Sorry, long-term capital loss. 3,80,000, 3.8 lakh. Unique blood. And loss from activity of owning, 25,000. I'm writing here OM horses, 25,000. And this is also unique blood. That's it, guys. Such a big question it looked like, but it's so simple. And once we finish, I'll teach you how to do the new one also. So nothing, only keep focusing on the losses. Let's start. First is SOP, nothing within the family. Here we can't go within the family. Here I can go within the family. Always try to go within the family first. So 9,20,000 minus 3,80,000, 5,40,000. So long-term capital gain, 5,40,000. Then here also I can go within the family, 7 lakh minus 25. This will become 6,75,000. And this goes away. All right. Now guys, within the family is okay. Now let's go outside the family. Can SOP go outside the family? Yes. So I can go everywhere, but PGBP is close by. So I can minus it from here. So I'm minusing 30,000 from here. So this becomes 9,40,000. This becomes 0. Any other loss? This loss cannot be done anything, so it will be carried forward. There is no loss here. There is no loss here. So this goes in a box. This is carried forward. This goes in a box. This goes in a box, and this also goes in a box. Total up all the boxes. 9,40,000 plus 5,40,000 plus 6,75,000 plus 5 lakh. 20. So the total income or the gross total income is how much? 26,55,000. And how many carry forwards do you have, guys? 1, which is speculative business loss, cannot be set off, so it will be carried forward. So you'll have 3 working notes. One is that speculative business loss of 4 lakh cannot be set off, and hence it will be carried forward. One is that partnership firm, if you have a loss, that is an exempt activity, cannot be set off, and loss from betting also cannot be set off. This is now as per the old. Now, how do you move to the new one? I'll show you how to move to the default tax regime, guys. First, start with the old one's number. What is the last number? 2655. So gross total income 2655. And now if you've done some setting off which is not allowed, you'll have to add it back. Example, SOP loss. Now first of all, SOP is not allowed only in the new scheme. You know, SOP interest is not allowed, so 0. Have you minused it? So what do you need to do? Add. So SOP loss, you'll have to add. SOP loss cannot be set off. That's the reason you will write, and you will add 30,000. P salary is the same. Speculative business is the same. Long-term capital gain is the same. OM horses is the same. So there is no change here. Okay, so only change is this one, and this becomes 26 lakh. Then how many thousand? 85,000. So what you thought was, oh sir, old and new, it is actually so simple, old and new. Yes, everyone. But of course, we'll tabulate it. This is the last sum that we'll present, and we'll see how this goes. And that's where we end it. Here we go. I'm wondering how we survive without too many breaks here. Very short breaks today, but good. Let's end early then. Let's present this. Yeah, let's end this here and let's present this and end this here. Everyone? Or is it too easy to present? What do you think? Should we present it? Should we not? One present? Okay. One set of will present, guys. Yes. Let's start. Then we'll not do set off. We'll try and do computation more. And the more computation we do, right, the more we'll try and do TDS, we'll try and do return of income, and we'll do more computation tomorrow. All right. Let's start. Everyone, question number. Can you help me with the question number? Okay, no problem. Question number 4 is September 25. There's small working note on that clubbing also, that father-in-law, that also will go in a note. Sourabh. Computation of total income. Optional tax regime of Sourabh. PY. If PY, AY, you don't have space, guys, you can also, there's another way of writing it. Here you write PY, here you write AY. Let's start. Particulars. Amount and amount. The first one, there's nothing in salaries, there's nothing in house property, straight PGBP. We'll set off in PGBP. Where you set off, only that you have to take. PGBP. Salary from partnership firm. What is the salary amount from the partnership firm? 9,70,000 in a column. Yes. SOP loss. Guys, why only 30,000? Because interest deduction for repairs, maximum 30,000. So you'll minus 30,000. And whatever is in a box goes in outer column, 9,40,000. Just asking, if it's derivative business loss, guys, derivatives are normal, so it will be considered normal, not speculative. So if in this sum they had added one more thing, derivatives loss, you could minus it from 9,40,000. Speculative business loss, and that is working note. Next, long-term capital gain less long-term capital loss. Long-term capital gain is how much? 9,20,000 and 3,80,000. What is the balance? 5,40,000. IFOS. In IFOS, what were the incomes on? I remember OM horses. The other one was no. There was some forfeiture. Forfeiture. Taxable. in year of receipt, 5 lakh. OM horses in the exam, guys, owning and maintaining race horses. Yeah, and then again, yeah. What is the OM horses income? Less OM horses loss brought forward 25,000. 11,75,000. Next, 26 lakh 55. Okay. Working note, very important working notes first. Interest on rupees 80,000 on gift. Hi, bhaiya. I'm at Shishadripuram, just getting free in 15-20 minutes. I'll call you. Boring Club, right? Okay, okay. So let me call you. In 10 minutes, I'll get free. I'm in a lecture. I'll call you in 10 minutes. 10 minutes. Yeah, okay. Bye. Interest on 80,000 on gift from father-in-law. Will be clubbed in the hands of her father-in-law as per section 64(1). Second, loss from speculative business rupees 4 lakh will be carried forward. Third, loss from betting cannot be set off. And fourth, loss from partnership firm cannot be set off. This is as per the old regime. Working notes are important. As much as you can explain whatever you've made of you. If you can't, at least working notes, very brief, you should write and you should end it there. Now, guys, this is as per the old tax. Now, as per the new, I'm not writing it, but I'm just telling you. Computation of total income and tax liability of Sourabh as per default tax regime, section 115 BSC. You can start only with gross total income as computed about 26,55,000 less SOP loss not allowed as a deduction under 115 BSC. So you'll add 30,000. Therefore, gross total income becomes 26,85,000. So that is how you will present it. This has been our 4 hours, 9 minutes and 31 seconds minus about 15 minutes of break overall. And this has been our day 1 marathon. I don't know what to call it, but doesn't matter, guys. It's just getting better at tax kind of a lecture. I'll meet you guys tomorrow again. And again, for about 4 hours, we'll look at those pain points which you want to address. We'll try and do it in the same manner. And if there are anything later, we can have an open Q&A. And of course, Q&A is always open on the tax doubt solving group, you know that. But for those who are new, there is a tax doubt solving group, join that. There is a Google Drive, join that. There is a QuickBook, use that. There are prediction lists, use that. There are top sections, use that. And try and score as many marks in DT as you can from these. Again, today, guys, we did not go into difficult things. We did not go into retirement benefits. We did not go to NPS. Because honestly, yes, they might be a question in that. But that 2 mark, 3 marks should not spoil the 20, 30 marks that you can score today by focusing on things that you know will come in the exam. Yes. So that's my agenda for today also and tomorrow also. I'm going to end the stream here. Thank you. Perfect, guys. Thank you. And see you guys tomorrow, 9 o'clock. I hope it's convenient for everyone. It's a Sunday, but sleep well, but wake up well. And I'll see you guys on a screen tomorrow again.